This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr on assignment. John Tucker in for Michael. He's on the Minnow down in the Caribbean.
Oh, very nice.
SS Minnow.
Good for him.
Relaxation.
Player.
With Tina
He
and
deserves
the rest of it. Michael Barr off this week, which is a good thing. Lisa Mateo here as well. She's steeled, ready for the newspapers, a wide list of things to speak of. We begin the week, and it's a 4-day week. Feels like it's like an 8-day week.
Exactly.
I mean, with the news flow.
Here we go. We're
going to do a lot on the foreign stuff. Kriti Gupta will be with us as she was just with Nathan with a pulse out of London. Marc Champion is who I wanted on continental Europe. But Paul, did you think we'd come in and see the market bid? I really didn't expect it.
We got a little bit of green on the screen here, Tom. This morning, the S&P is up about 0.3%. Same for the Dow and the NASDAQ here. Yields a little bit higher here. The 10-year Treasury, Tom, a little bit, about 4 basis points higher, 4.51%, right in that tight trading range we've been in for some time.
10-year real yield 204 out to 206, so a little bit higher yield is seen by the inflation-adjusted yield. Japan, I mean, completely off the radar. Japan's sort of kind of like a Western economy.
Yeah.
Like real GDP.
Real GDP.
Like nominal GDP.
Exactly.
How quaint.
Exactly.
And, it's on Damien Sassower's radar, but I'm sorry.
Yeah, we'll see what he has to say.
It's not what we've known for 30 years.
No, absolutely not. I mean, gold higher yet again, Tom. We're on that 3,000 watch, 29.27 for gold.
We're going to get to Damien Sassower as we can, as people are seeing they can round him up right now. Bloomberg Surveillance this morning. We're brought to you by BAM Mutual. BAM Mutual, B-A-M, BAM Mutual. They insure municipal bonds that finance essential infrastructure and provide guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit bambonds.com. Let me spell that out on a holiday lengthened Tuesday. BAMBONDS, bambonds.com. We thank them for this word. They got it. They ranked with you on best breakfasts on remote.
Sure.
Right?
Yeah, we were Build American Mutual. We were downtown in their offices, and they take good care of us. Alex Steele and I down there for a little remote.
I got Tom. Thank you for out on LinkedIn. I think it was. Shut up and do more on municipal bonds.
Oh, sure.
That's what.
Yeah, absolutely.
Thank Tom for that out on LinkedIn this week. And for you and BAM Mutual, we'll do more with municipal bonds. Futures up 20 from the Interactive Broker Studios, the Bloomberg Business Flash. El Mateo.
Yeah, and we've got stock futures kind of edging higher with the S&P 500 within striking distance of a fresh record. We'll start there. S&P futures up about 0.3%, 19 points. Dow futures up 0.1%, 60 points. NASDAQ futures up 0.3%, 75 points. The 2-year yield 4.28%, up 1 basis point. The yield on the 10-year 4.52%, and that's up 3 basis points. To commodities, like we said, got to point out gold. COMEX gold $2,927 an ounce. Goldman Sachs actually raised its year-end gold target to $3,100 an ounce. We go to oil. Brent crude $75 a barrel. WTI crude $71 a barrel. The Bloomberg Dollar Spot Index up about 0.1%. Warren Buffett's latest stock pick sparking some moves in individual stocks. So Berkshire Hathaway took a stake in Constellation Brands. Their shares up more than 8%. It also added a stake in Domino's Pizza. Their shares were higher. Now they're down about 0.5%. We go to Intel. Shares up about 6%, and that's after the Wall Street Journal reported Broadcom, TSMC eyeing separate deals that would break up that U.S. chip maker into two. And Chinese tech company Baidu posted lower revenue for the third straight quarter, although it did double its profit. Its ADR is down more than 1.5%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Paul and I get together. We get a phone call. Every time Duke wins, we have a 20-minute phone call to figure out the path forward. Emily Graffeo will be with us on Duke, Virginia here. Pick up the pieces as well.
Yep.
But we said that what we saw Friday was divergence. And folks, like in umpteen years, I've never seen the differing opinion of guests, whatever their act, over where we're going. So Paul and I agreed we have to start the week with Damien Sassower to see the litmus paper that he sees on his 4 Bloombergs down at his desk with 12 screens. Damien Sassower drives EM for Bloomberg Intelligence. Let's start with the litmus paper. What does the currency market say about the sum of Euro politics, transatlantic politics, and the fact China's gone silent?
Well, I love that you began with divergence, Tom, because that's exactly the theme that I'm focused on this week. We have the Antipodean two-step going on today and tomorrow. We saw Australia actually basically cut rates by 25 basis points to 4.1%. This is one of the most hawkish central banks in G10. Every G10 currency, to your point on currencies, is up versus the dollar this year. 17 of 21 emerging market currencies are up versus the dollar this year. And yet you see these central banks getting more dovish. They're cutting rates in the face of a Fed on hold for longer. You look at the 10-year in Australia, 4.51%. Right. Lisa, you just said 4.52% in the 10-year here in the U.S. Divergence, rate differentials, that's what drives the currency market.
I saw Broken Hill Properties, BHP, they cut their dividend or whatever. Is it just a China slowdown affecting not only Sydney, but all the Antipodeans, but also the Yesopodians, all the way up to Japan? I mean, the fact is the Pacific Rim has to react to the global upset.
Well, I mean, look, if you look at Australia, right, we had expected, Aussie dollar to basically test 62, and we did that already. We're now back up to 64 versus the dollar. But sensitivity to China growth has really declined in recent years, Tom. I mean, it's still correlated really to global business sentiment. But, I mean, if you look at, this is a big week for the miners, right? You've got Fortescue out of Australia. You've got Newmont. You've got Anglo. Everyone's reporting some big news about Anglo selling off its mining business to a Chinese conglomerate in Brazil. This is all terms of trade. This is all going to drive the currency market. And for me, you mentioned gold at the beginning. Goldman's now looking for gold to be, $3,100 by the end of this year? That's bananas.
Well, this is, again, the overwhelming news flow, our listeners and viewers. Here, we've got the whole gold idea and what the Secretary of Treasury will do. OMG, we're going to 4,000. I'm not predicting that. But it's a set of themes, Paul, that leads to this divergence of thinking. And
one of the things that's kind of changed a little bit over the last 4 or 5 days in your world, Damien, is China. My clients, that when I was back in the BI days, we were talking about Alibaba and Tencent, what great stories they were. And then the government came down and just cracked down on the China technology. Now it looks like they're doing a little bit of a kumbaya moment there in China. Are your clients sensing that?
I am so happy you brought it up. Did you see the move last week? On Friday alone. Yep. I think it doubled. We are up now 14% on the MSCI China. Tom, when I sat in for you, Paul, when you were skiing last week, it was only up 7%. I think on Thursday, Friday, you basically had a 7 to 8% move in the MSCI China, largely because of BABA, which was up 21% last week in dollar terms.
This is important. When Paul was skiing and gone,
things happen.
Jeff DeGraff was on saying China bottom.
Wow.
That was one of the clearest things last week. Forget about divergences. On the technicals, he's saying China bottom. Do you see that in your work?
No, I don't really believe in the variable interest entity concept, which basically means you really don't own anything in China. These are just synthetics.
Yep.
When you own stocks in China, you own VIEs, which basically is a promise that you're entitled to the dividends or the cash flows or whatever it is as a shareholder of the company. But you're not Chinese, so you're not allowed to own shares of any of these companies. So, it's a promise to pay. It's a promissory note, and as a fiduciary for other people's money, it's going to be very, very difficult for a fund manager to justify a meaningful position in a company like Alibaba or Meituan or Tencent, despite the fact that they're up double digits year to date.
So what is the view today in your world, giving this the magnitude of China within the MSCI? What do you do here?
You can't ignore it, right? But I think it's more of a short-termist sort of trading type of position. You got to be very, very nimble. You got to hope that you've got, a position that's sized appropriately where if you need to get out, you can get out fast. I think that's the real risk there.
What do you see in a fractured political Europe? In CDS, credit default swaps, one measurement of angst, or in the 3 measurements of ruble? What do you see this morning, given the politics we have to deal with for 3 hours?
I look at the zero coupon Ukraine US dollar 2035s. So Ukraine has zero coupon dollar bonds.
No, okay, hold on.
Okay, Ukraine. These are the 2035s. They're down 2 cents to 68 cents overnight. So basically, they were up to 70 cents. So look, they're up 15% over the last month, 20% over the last 3 months. Tom, I'd love to look at CDS as a proxy for what the market's thinking, but I think credit default swaps swaps are kind of a little bit not capturing the market. So I'd rather look at these Ukraine dollar bonds and look at supply and demand. And what they're telling me is, look, the market is basically rewarding investors like Mark Franklin at EMSO, who had the you-know-whats to get in early, but now they're starting to pare back here. We'll see if Zelensky has a seat at the table.
Okay, so I got the Ukraine zero up, folks. Only on Bloomberg. Where else are you going to do this on Bloomberg,
Paul,
folks?
do I have you spinning yet?
Yes, you got the screen. Totally.
So
I need
to
a
see
sticker.
my screen. When I'm not looking at bow tie ads, I've got the Ukraine zero of 2035 popping. When Damien told me to load the boat, it was 40.
Oh, I see it now. I got
and
it.
now
Right,
it's
I'm on it.
69. I mean, why is there a bid on Ukraine, young Sassower?
Well, I mean, look, it is a bid on, war reparations. After this is all said and done, this isn't a country who is rich in resources, agriculturally, mining-wise, industrial metals, rare earths for that, for example, you hear Trump talking about that. But really, at the end of the day, it's a play that, the U.S. and Europe will step up, and this is a country that's ripe for reconstruction, and they're going to pay off their bonds.
Thank you for being in this morning. You can go home now.
So now I got the Ukraine zero coupon 2035s on my screen.
That's the
boom. There,
that's
boom.
That's
a Sassower value add. We welcome all of you across the nation and across Europe today on the ways you are listening to us on Apple CarPlay, Android Auto. Good morning across the corridor from 99.1 FM Washington up to a frigid New England this morning. It's just wicked cold. We'll talk about that in a bit. On YouTube, around the world in this nation, good morning as well. Now from our London studio at Queen Victoria Street, with a summation of what to do given the news flow, Daniel Morse joins us from BNP Paribas. Daniel, have you changed your outlook given the fracture I see within the London newspapers, Le Monde, the German newspapers, what we saw in Munich? Do you adapt and adjust to that?
Well, certainly not yet, and to the degree that those are more political forces, from an asset management point of view, that's something that's, I think, quite hard to trade on. I think we're still trying to focus on growth and inflation, earnings potential, and so on, and trying to anticipate what the effects of what we've seen over the last couple of weeks on that, I think, is a bit more tricky.
Daniel, I'm looking at the stock 600. What a move it's had year to date. Why do investors like these European companies? Is it simply the valuation?
Well, actually not that. What's funny, that was the argument over many years when you would look at forward PEs for Europe, they were quite low, and when you tried to make your bull case for Europe, it was that valuations were low, and it, frankly, I think almost never worked. I think if you look at the detail, particularly at a sector level, of what's driven the outperformance, you really see two things. So number one, a lot of it's financial. So that gets to the divergence that we have in monetary policy between the Fed and the ECB. Also, you see in autos, capital goods, so potentially, on one hand, impact of the steel and aluminum tariffs, and then more recently, perhaps, some of that anticipation of rebuilding in Ukraine.
I should say good morning to David out in Green Bay. Really? He's been a long-time holder of Daniel Morris's BNP Paribas. Talk about a moonshot. Let's just cut to that, to Paul's good question, Daniel Morris. Americans are going, wait, Germany's flat on their back, but the DAX, the roulette wheel of Europe, is up like a moonshot. Yeah, the German DAX index. What's the why? Why is there a bid on the DAX?
Well, I think it illustrates a point. We're not investing in GDP. We're investing in equities. Germany, of course, global companies. It's not that much, to some degree, certainly dependent on the domestic economy, but they're not small cap stocks. So that, I think, is one thing to keep in mind. Of course, the aerospace and defense angle, anticipation for some recovery in industrial production, I think all of that's a benefit. And also just extremely low expectations.
Daniel Morris with us with BNP Paribas. We continue. Good morning on YouTube. Thrilled with the results there. Thank you so much for subscribing at Bloomberg Podcast. Daniel Morris, your view of America. We treasure a view from across the pond, the distance you have. Is it a bull market that continues because of American corporate exceptionalism?
Well, currently we're neutral on equities overall, and we've moved our overweight to U.S. back to neutral. But it's much more of a tactical move, reflecting, to be honest, the resurgence that we have seen already in Europe and also partly in China. In the view that the U.S. had gone quite far, you had these laggers that potentially had the potential to catch up, which they have at least for now. Medium term, though, have to agree. I mean, it is hard to argue with superior earnings growth coming out of U.S. equities versus the rest of the world. And if valuations, for the most part, are not extreme, at least we can say, I mean, that would suggest U.S. equities should do better in the medium term.
What are you seeing, Daniel, from earnings so far this cycle, and maybe some of the guidance that we've seen some of the leading companies?
Well, it's a bit hard to conclude. If you look at the share of guidance that was positive, it actually was a bit lower. It tailed off at the end of the quarter. There may be some repercussions, everything that's going on around AI, and then expectations then for earnings in that sector in the U.S. That said, the sample rate, so it's a bit similar issue that we've had with some of the U.S. data. The sample size was a bit smaller, so you're a little cautious about over-interpreting it. But there does seem to be, relative to what certainly was a quite bullish outlook that we all had post the election, maybe some tempering of those expectations.
So, Daniel, how do we think about 2025 here? We're in the second month of the year, and we've had 2023, 24, where we had more than 20% move higher in the S&P 500. What are you telling your clients these days about expectations for equity returns in 2025?
Certainly, and I guess it's the contrast that we think of those returns that we have for 2024 relative to the expectations we had at the beginning of the year. Of course, most everyone then forecasting a recession. We were all talking about the inverted yield curve and so on. So it's a bit now with the reverse of those expectations, looking for U.S. exceptionalism, potentially even a soft landing at some point, and then thinking, well, are we going to be wrong in the same way this year as we were last year, and what might that mean for equities? We don't see data, though, that's suggesting that's happening, so we're kind of happy to stick with the U.S. exceptionalism view for now, but always watching what we see on the economic front.
Daniel Morris, thank you so much with BNP Paribas this morning from London. Greatly appreciate it. Thank you for coming in to our offices there. Futures advance, it's ever slight, but nevertheless a lift up 21 on S&P futures. NASDAQ up a solid 82 points, up 0.4%. With our news in New York City, John Tucker.
And good morning, guys. Talks now underway in Saudi Arabia between the U.S. and Russia to end the war in Ukraine. Ukraine's not represented at the meeting, headed by Secretary of State Marco Rubio and Russian Foreign Minister Sergei Lavrov in Riyadh. Yesterday, Ukraine's President Volodymyr Zelensky reiterated he won't recognize any agreement reached without his country.
Ukraine is not participating. Ukraine knew nothing about it. Ukraine regards any negotiations on Ukraine without Ukraine as negotiations with no result. And we cannot acknowledge anything, any arrangements about us that were made without us.
Ukraine President Volodymyr Zelensky speaking through an interpreter after both the U.S. and Russia clarified that Ukraine would be involved in future negotiations. President Trump's push to rein in the federal government leading to more high-profile clashes. According to the Washington Post, the acting head of the Social Security Administration resigned over the weekend after a dispute with Elon Musk's government efficiency team over its attempts to access sensitive government records. In another plane crash, a Delta Airlines plane flipped upside down upon landing in windy and freezing conditions in Toronto yesterday. All 80 people on board survived. 15 were injured. Bruce Landesberg is the former vice chair of the National Transportation Safety Board.
We will have a team going up there. The GO team is just in the process of getting organized now, and they'll go up there and they will participate with TSB in going through the wreckage and gathering information, and then we'll provide our expertise and we'll share knowledge.
That's former NTSB Vice Chair Bruce Landesberg. Meantime, the Trump administration has begun firing several hundred Federal Aviation Administration employees. Probationary workers were targeted. In a message posted to X late Monday, Transportation Secretary Sean Duffy said 0 air traffic controllers and critical safety personnel were let go. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Paul, Tom.
John Tucker, thanks so much. In the coming weeks, we're really going to focus on airlines and on the integrity of the system. But I'm sorry, Paul, after this event, that event, another event, this event, people are really, I would say the general person out there is just like, what is going on?
Right, exactly right. I mean, it just feels like the system is at full speed. I mean, every plane I go on is fully,
the runways are jammed.
The runways are jammed, and I was just saying the last time I was at an airport was on like a Thursday. And I was like, holy cow, this thing, you can't, it is packed.
Yeah.
It was unbelievable, just on a Thursday morning random. I mean, why is it so? So anyway, the system seems to be at or near capacity.
We're going to try to get more knowledgeable on that. We've got a great team to do that, led by George Ferguson, among others, Mary Schlangenstein down in Dallas with DFW and American Airlines. We'll have to see. And, of course, our guests as well. Look for that. Over the weekend, we did a long look at digital. We thank you for helping us out on digital media, particularly the reach of YouTube. We're finding just jaw-dropping. Thank you for helping us by subscribing at Bloomberg Podcast, growing each and every day. Tell friends, Romans, countrymen, in-laws about it. Even in-laws can subscribe. Did a lot of research. The highlight is Lisa Mateo's newspapers.
Oh, yeah, of course.
That's really what's
where the
driving
feedback
it.
comes.
It's just, feedback is there. The VIX 15.57. I'm going to call it churning here. Where'd the Dow settle on Friday? 44,546. From New York, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got trading picking back up after the holiday, with futures right now advancing. We have NASDAQ futures up 0.4%, 90 points. Dow futures up 0.1%, 66 points. S&P futures up 0.3%, or 21 points. The two-year yield at 4.28%, up 2 basis points. The yield on the 10-year 4.51%, and that's up 3 basis points. A global look: European bonds extending declines on defense spending concerns. We have the U.S. and Russia meeting to negotiate an end to the war with Ukraine. Now, because of that, I just want to check in with U.S. defense stocks. For example, Lockheed Martin up about 1.5%. On the economic calendar this week, we have a read on Empire Manufacturing, but also this week, housing starts, building permits, initial jobless claims, existing home sales. A few companies making news this morning. OpenAI's co-founder said to be raising about more than $1 billion for his AI startup. It's called Safe Superintelligence, at a valuation of over $30 billion. And sticking with OpenAI, the Financial Times reporting that the company is considering granting special voting rights to its board to fend off hostile bidders like Elon Musk. And then, speaking of Musk, his XAI, well, it launched its Grok 3 chatbot, which he claims outperforms rivals including OpenAI and Google. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
That was really impressive. I mean, very AI.
Yeah.
Very AI.
Yeah.
It's all about AI.
I still don't understand
Grok 3.
Yeah, sure.
Is AI basically just nothing more than trying to replace Google search?
Well, I don't know. I mean, in some instances, I think it can for some people.
I look at some of the summaries and it's like, okay, I learned something.
Yeah.
And I look at others and they're barely in English.
Right.
I don't.
So it's iterating as we speak.
It's a work in progress.
Yep.
Speaking of work in progress, we say good morning to all of you and go to Kriti Gupta in London, of course, with Bloomberg and Television and Bloomberg Radio. Kriti Gupta, good morning. Kriti, we're talking here about the great divergences out there, and it centers for me and Paul around exuberance. I was going to go to the S&P and look for a drawdown, but you can't have a drawdown if it's at a record high. What's the level of exuberance out there on the Kriti Gupta meter?
Is it exuberance or is it excitement about finally finding a rotation? I think that's kind of what I'm learning in Europe at the moment, simply because the trades that don't actually make sense or haven't made sense in the last year and a half off various fundamental reasons, Tom, Paul, they're the ones that are most in vogue right now. I'm sitting in Europe. That's all we're talking about. The people have a lot of doomsday around Europe, and that's where the money's coming in. Doomsday around China, that's where the money's going. Excited about America, looking at the economic resilience, that's where the money's coming out. It's a really interesting dynamic.
Exactly. What I'm looking at within the angst, I'm reading like 4 or 5 newspapers over there, all in English. I tried to read it in French like Critty, and I couldn't understand it. But Critty, I'm looking at the doom and gloom in the European newspapers, and I got the DAX at a record high, and GDP numbers continuing to surprise to the upside, like what we saw in Japan over the weekend.
Yeah, it's a really interesting one because the DAX outperformance is coming at a time when we are in the countdown to the German election with a struggling economy, by the way. A lot of that has to do with the defense trade. I mean, we've been talking, I think, for the last 3 or 4 days about what a potential Ukrainian ceasefire might actually look like. That peace dividend and the sudden urgency among European leaders, including right here in the UK, to defend and to invest in their military is moving those stocks. But this is what was interesting. Sharon Bell over at Goldman Sachs joined my program this morning, and she made a really interesting point. She says,
her program.
It is my program. Come on, give me a little credit here. 70 to 80% of European defense spending is leaked to the United States because that's where you get some of the equipment. So this is actually a positive, not just for the U.S., but for Europe as well.
Paul, the Ben Laidler low, Christmas Eve 2018. SPX is up 159%. 17% per year.
Per year, yep.
Things are terrible.
Things are terrible out there. Critty, I mean, the Europe, you guys are certainly front and center in terms of kind of global geopolitical news here. We've got Trump and Putin teams meeting on Ukraine and Saudi Arabia. But Europe is not really there at all. What's the feeling within London, within Europe, as to how this might play out over the next days and weeks?
Paul, I love that you called me a European. Don't worry, I do bleed red, white, and blue. I'm just here. Yeah, no, this is a really interesting one because the feeling on the ground here is that there really is a lot of concern around the tariff policy. But right here in the UK, Keir Starmer has done something that I think is throwing a lot of leaders for a little bit of a loop, which is they're saying that they were willing, the UK is willing to put boots on the ground in Ukraine for security reassurance from the United States. That's a promise that even Joe Biden, at his height of support for Ukraine, wasn't willing to do. The problem here is he needs the help from NATO and he needs the help from his European counterparts. And right now, you're not actually able to get it. The FT had a great story out, I believe, in the last 24 hours, talking about how Emmanuel Macron is trying to get peacekeeping forces in Ukraine. Germany, Italy, Spain, Poland, they're all saying no way.
Critty, my read of the weekend was Mario Draghi coming off his Chatham House report on what Europe needs to do. It's been written up, talked up by everybody, including Christine Lagarde. He reduxed it this weekend in the FT as well. Is anyone over there listening to the gentleman from the Massachusetts Institute of Technology?
They absolutely are. The numbers off that article, 45% to 110%. That's the amount, he said, citing the IMF, of basically tariffs that Europe has put it on himself via regulation. But if you talk to the folks who are talking to Mario Draghi's team behind the scenes, for example, they'll tell you one thing, which is that this is something he's been saying for decades. The story, the report, the Draghi report that's just come out is it's a kind of phenomenal dynamic that has existed for about 30 years and counting. Europeans are just now getting to actually act on it. And I think when you've started to see these talks with Russia, the potential thought of rehabilitating Russia, suddenly you've seen European leaders spring to urgency in a way that I've never seen before.
Paul, the summary of the article is everybody forget about the cutesy pie tariffs, 5%, 10%, 25%. Through regulation and internal dynamics and rules, country to country decisions, Europe's carrying in their service sector an equivalent 45% tariff. Yeah.
You mentioned the German election. Critty. This could be really important for just broader European economics and politics. What's the feeling of how this might play out?
Well, this is a really big deal because Germany is at the kind of nexus of so many important sectors that we really pay attention to the United States. Technology is one. Private equity is a big one. The private equity hubs are actually going into Germany. Infrastructure is another, but specifically the auto sector. I've heard Germany be described as going through Detroit in the 1970s, basically, when it comes to their auto manufacturing sector. It has benefited for years on the cyclicality of the auto sector, really pushing for EVs. Now they have to roll all of that back, fire 1,000,001 people in terms of some of the labor force that they have, and deal with unions. On top of that, invest in their defense. And that's not even trying to get some of their raw materials and dealing with not just the United States, but China as well. So these are all the questions that are going to be on the ballot this weekend when Germany basically votes between Olaf Scholz and the conservative frontrunner, Friedrich Merz, and 2 other candidates.
Kriti Gupta, thank you so much. Really wonderful son there. Thank you for those comments on Mario Draghi's Chatham House essay, article, I should say, of a number of months ago in the follow-up in the FT this weekend. Futures advance up 18 when I walked in the door, up 20 now, up 22.50. There is a bid to the market of 0.4%, like bid on the NASDAQ as well. The VIX not giving me love yet, but let's remember we started at 15 level after a long weekend. Bitcoin down. Do we have a reason Bitcoin has plunged? I say plunged down 14% from the high.
Exactly. We're sitting here just below $96,000 per token. It's just, I think what a lot of folks have kind of come to the conclusion that this is simply, a risk measurement here. And if it's risk on, it's risk off. And one of the ways you play that is with Bitcoin here. But I think, again, most folks out there on the crypto space still feel like long-term, pretty bullish.
Gold, $29.28, $2,928. And a lot of percolation over the weekend. I don't pretend to understand it. I think we got to drag McGlone on.
Yeah, I mean, the best I can read out on the street is, some of these calls we've seen from the sell side, Tom, is just a little bit of a safe haven here, a little bit, as it usually is for a lot of investors. But again, a lot of buying coming out of China, both from the government and from individuals. And we've seen central bank buying across the board of gold. So interesting to see that play out here. WTI crude oil, $71 a barrel. That seems to have found a new home, kind of right around that level these days.
We'll have to see. We say good morning to all of you. We're out on YouTube. Subscribe to Bloomberg Podcast. I'm reading about YouTube. Yeah. Total bedlam, like 2003. 2004. It's a fast. Mark Berland, I featured it out on Twitter and LinkedIn. I really can't say enough about the book of the total chaos. I mean, it makes Facebook look like a McKinsey exercise. Total chaos. But thank you to YouTube and all you're doing. I'm out on YouTube Premium. Wow. You got to pay for it. It's a different thing, but it's really, really pretty slick. Futures up 24. They continue to advance. It's a Tuesday. It's a holiday lengthened work week. Stay with us from New York City. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures pointing to a higher open. This is after the President's Day trading holiday. We have NASDAQ futures up 0.4%, 99 points. S&P futures up 0.3%, 24 points. And Dow futures up 0.1% or 88 points. The 2-year yield, 4.28%. That's up 2 basis points. The yield on the 10-year, 4.51%. And that's up 3 basis points. To commodities, have to point out gold. COMEX gold, $2,928 an ounce. We go to Brent crude, $75 a barrel. WTI crude, $71 a barrel. The Bloomberg Dollar Spot Index up about 0.1%, and we have Bitcoin down about 0.2% at just over 96,000. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Whatever your politics, and every single day, the surveillance team, Paul Sweeney and I, we try to stay balanced and measured in the middle. That's the heritage that we got from Matt Winkler, and we're trying as hard as we can. But if you look at the New York Times, the Washington Post, the Bloomberg coverage, and on, what a jumble in Washington. She's Senior Vice President Clarity at Veda Partners. Henrietta Trace joins us right now. Henrietta, let me just cut to the chase of the angst out there on a given February, Saturday, or Sunday. Is Elon Musk going to see Lisa Mateo's tax return?
Well, that's definitely the question of the hour. And the IRS chief, the Social Security chief are all very concerned about the access that is being doled out to Musk and his associates who have either never been through any kind of background check from Congress, nor are they confirmed positions. And this is highly sensitive information about your adoption status, your employment history, your health care. It's pretty exhaustive. And that's what's got a lot of senior folks retiring now.
What's the why of this in terms of the response? Like, am I correct? We're waiting for a Supreme Court decision on one of the 14 things we're upset about?
Right. There's a number of lawsuits that have already been filed. The president has gone directly to the Supreme Court. I mean, a big part of this is that they want to be sued. They want to get the Impoundment Act overruled. You can see that with some of the nomination hearings and hearing from Stephen Miller, senior advisors to the president, Russ Mott. You know, they want to go to the Supreme Court and litigate how much authority the president has over Congress so that he can take more of it. And so, for example, with the Impoundment Act, Congress appropriates trillions of dollars every single year, and the president wants to have final say over whether that money goes out or not, which strips the power from the states, the House members and districts, and is historically a huge problem for lawmakers on either side of the aisle. Totally bipartisan support there. You heard Rand Paul rail against this potentiality in the nominations process, as well as Democratic senators.
Henrietta, where is the Democratic Party today? It feels like since Inauguration Day, we haven't heard word one from them.
Man, I couldn't tell you. I don't know. Right now, you know, they're really keeping it all in the family. It's Republicans on the Senate side versus Republicans on the House side. I would say that as we get into March 14th and the government funding debate, there's going to be an opportunity for Democrats to really insert themselves in this process. And I expect that they will take advantage of that. Right. Hakeem Jeffries and Chuck Schumer are ready for that one.
I mean, the second head or whatever of Social Security exited stage right this weekend. Is John Tucker going to get his Social Security check?
Well, that's the huge question. I mean, if you can confuse Gaza in Palestine with Gaza in Mozambique, and now you have access to 68 million individuals who are on Social Security and 73 million who are on Medicaid, what else are you going to get wrong? And Elon Musk stood in the Oval Office and told us that he was going to get stuff wrong. There is no transparency, despite how many times they say there is. And I think that's what really has these leaders of, as you mentioned, the IRS and Social Security really concerned and doing the most that they can to revolt.
So
please take the next question,
please,
Paul. I don't know what to say.
Well, I'm going to go right to the money here. You talked about March 14th. Is this government going to stay funded through March 14th? What has to happen for this government in the budget?
Sure. So the federal government is, $1.7 trillion worth of funding every single year. I very much agree that, or expect that funding will increase. The demands are for a 1% increase across non-defense discretionary and defense, depending on who you're asking on which side of the aisle right now. the House and the Senate Republicans, once again, are not in a place of agreement. And the problem we have is that you need 7 Democratic votes for any bill to pass the Senate. And that means you're going to lose 50 to 150 House Republicans. So bipartisanship is mandatory. I think that's why you're seeing so much focus on speed from the Speaker to get their budget through, because once we start negotiating with Democrats, then the wheels tend to fall off. That's coming in a week's time.
Henrietta Trace, with your decades of experience on this, let's say the courts act and the courts put Mr. Musk and others in their place, so to say. What happens next? I mean, do they change the locks on the IRS doors? I mean, what do you perceive to be the next step when the courts win?
Well, obviously, the president will appeal and just keep doing that time and time again. Eventually, Congress is going to have to assert itself, and the agencies are the judges are overturning some of the findings of DOJ. You see that with the forced hiring freezes and things along those lines. Eventually, this becomes a problem that gets overturned by the judicial courts, and Congress is going to have to step up. Right now, you see the Republican conference in the House and Senate completely absconding their duty to regulate the executive branch, and that's going to have to change. I suspect as we get closer to the 2026 midterms, and we see the Democrats' strategy for targeting all of the moderate Republicans and those in states that went for Biden in 2020, they're going to make some pretty aggressive moves. They're already talking about the Kentucky races, for example, and how when the Republican conference goes after Medicaid, Medicare, and health care, they tend to win elections. So at that point, I would expect that Republicans find their voice to challenge the president on some of his most recent tactics.
You're a saint. I don't know what else to say. Henrietta Trace, I learned a lot there. I think always. I learned a lot.
Yeah.
She gets, it's like Dr. Henrietta.
I know.
She got me
I read
through.
everything that she writes.
I think I can make it to tomorrow.
Exactly.
Henrietta Trace with Veda Partners, just wonderful. What we know is futures advance, up 18, up 19, now up 23. With our news in New York City, John Tucker.
And a round of talks to end the war in Ukraine have concluded in Saudi Arabia. According to sources, no word on the outcome just yet. Secretary of State Marco Rubio and the Russian Foreign Minister Sergei Lavrov led the talks. They did not include Ukraine or the Europeans. Let's get more from Bloomberg senior reporter Kevin Whitelaw.
We don't know a lot, and I think that's part of what's unnerving many in Europe right now, is that this is moving much faster than anyone had really anticipated. These direct kinds of talks are ones that have been the U.S. had avoided under Biden. And so even though the U.S. has suggested that these are just preliminary talks, the speed of them has everyone nervous about whether this actually could end up moving further. I think the real question that Europe has going into it is they just don't really understand what the U.S. bottom line is, how much they're willing to concede or give to Russia. And at the same time, we still don't really know how serious Russia is about any kind of negotiation that really provides any kind of actual future for Ukraine.
And now Fox is reporting the U.S. and Russia are proposing a 3-stage peace plan, which would force new Ukraine elections. In D.C., President Trump's government efficiency push drawing more high-profile resignations. The Washington Post reporting the acting Social Security Commissioner, Michelle King, resigned over the weekend after protesting the DOJ team's attempts to access sensitive systems. And President Trump replacing King with Leland Dudick, an anti-fraud manager who's passing over dozens of higher-ranking officials. Separately, the head of the Food and Drug Administration's Food Division, Jim Jones, resigned yesterday, citing widespread job cuts across the agency. Nearly 24 U.S. attorneys were fired last week, but they didn't find out officially until last night. That's because of an email mistake. Bloomberg Law has learned 22 top prosecutors from across the nation had termination notices sent to their internal government email accounts rather than their personal emails. The prosecutors suspected their jobs were on the line after they lost access to government devices last Friday. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Tom, Paul, Lisa.
John Tucker, thanks so much. I went seriously to look at the Standard & Poor's 500 and to calculate the drawdown, thinking it was 1% or 2%.
Yeah.
There's no drawdown.
No.
We're all ATH this morning.
No.
Do we feel like an all-time high?
It doesn't feel like it, but it's been such a solid move in 2023, 2024,
Solid's the right word. Yeah.
and now starting off in 2025. 5 here. And, if the Fed's going to be on the sidelines, this has to be earnings driven. So the question is, will the earnings be there for the remainder of the year?
We'll have to see. I don't know. American oil, 71.09.
Yep.
Really not moving today with all the news coming out. There's all sorts of unverifiable news coming out of Europe, I should say. We're trying to sort it out for you to give you the latest news on Russia, the U.S., and Ukraine. Good morning.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
The daily look at the front page is the Lisa Mateo Hour. It's brought to you by IBKR. Will the year-over-year change in U.S. PPI exceed 3% this February of 2025 at IBKR? Forecast trader, yes, it was recently 39%, 39%. What's your take? Trade your prediction at IBKR, ibkr.com/forecast. And now a 2-hour newspapers because there's that much news flow. Where do you start?
Well, not sure if you noticed on your Google Maps, but the Gulf of Mexico now reads Gulf of America.
Really?
You can see it now. Mexico, though, now threatening to sue Google over the name change. It all started because of President Trump's executive order to change the name. But during a news conference yesterday, you had Mexican's president started talking about this. She said a lot of the body of water, it's
I'm on
outside. And you see it, right?
I see it.
See, it's in the U.S. You can see that. But she's saying is that a lot of the body of water lies outside the U.S. maritime borders in regions that are controlled by Mexico and Cuba. And she says the executive orders to rename it only apply to those in the U.S. Continental shelf. So that's what she's arguing back and forth.
And Encyclopedia Britannica said, no, we're not going to do that.
They didn't do it.
And I think, I don't know where AP is. I believe they've also said, no, we're not going to do that.
They have not, I
have no idea.
They're not allowed on Air Force One either.
How you do that? I mean, I don't know how they came up with the Gulf of Mexico versus Gulf of America. I have to do some research on that. But it is about the territorial waters. I think Mexico has a greater percentage of the territorial waters.
Mexico and Cuba is ginormous.
Yeah.
Like Cuba goes way over to the west.
Yep. So, all right.
Yeah, but now it's a battle.
All right.
How about if we name it the Gulf of Jimmy Buffett? That'll,
That would be perfect.
Straighten it out.
That would win over. We've been talking about, the bird flu, spreading from birds to chickens to cows. And now scientists are saying, well, maybe it could be coming from more humans. There's been more dairy farmers, about 68 confirmed cases in people, but they're mostly dairy farmers. And now veterinarians who cared for the cows are contracting it. So what they're saying is that scientists are worried because it hasn't really spread from human to human transmission.
Yeah.
So that's where they think things could change. And if, it could happen because we're in the worst flu season. So you have that, it could raise a possibility of this new, more infectious bird flu strain because we're in such an infectious flu season.
Can I ask something dumb?
No.
What if you get bird flu?
Yeah, that's correct.
Is it like a 3-day, I've got the plague, I can't go to work, or is it more serious?
I don't know if it's more serious, but what they're saying, the problem is that the federal government has this limited stockpile of vaccines if you were to get it. So that could be an issue if it starts spreading to more humans.
I'm not up to speed on this other than I can't buy eggs.
Right.
When can we not buy milk? I mean, what's the, does it go over to cows like you say and milk?
It's tough.
Cows don't do eggs, right?
No.
As far as I know.
But the Costco at Costco they did have the brown eggs only and everyone was scrambling for them. It was like
scrambling for them, and you were fried because you were last in line. Okay, Paul feels poached. Okay, last quickly.
How to stay fit past 100 years old without going to the gym. Okay,
so this is notes.
Take notes, okay? Because Business Insider spoke to centenarians, and they say that they did a couple things. So what you have to do is you have to walk a lot more. So outside, up and down the hallway, go to Walmart, walk the aisles, whatever you do. You have to cycle instead of driving, okay? Even if it's like a stationary bike, if you can't drive, at that age. All right, you can get on the Peloton, Paul, okay? Yep. Make it a social thing, so join like a club, like a bowling club, Paul.
How many centenarians are there out there?
There is more than you think.
I'm guessing.
To be amazed. So they're basically saying these things because they're saying, here's what we've been doing over the past 10, 20 years. And that's why we're living so long.
Paul and I are just trying to get through a Tuesday morning. It's 12 degrees out.
Exactly.
And you just seem glad all over. I mean, I don't know what to say, Lisa. You just, she's so glad.
Lisa with them at
yes,
newspapers.
You got to keep moving.
Lisa Mateo with the newspapers. Thank you so much. Come on, it's freezing out. It's 161-mile-an-hour wind on Mount Washington. It's time for the Dave Clark 5.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, deep on assignment. He's on the minnow down south, somewhere in the Gulf of America.
Gulf of America,
see.
Good.
Michael Barr, good morning.
Yep.
Listening down south. Lisa Mateo here. As always, lots to talk about. An interesting day with the tape elevated. The VIX 15.53. Record high.
I know.
Do we see a 14 or dare I say a 13 VIX, a signal of a bull market?
Why not? I mean, again, we've looking at these markets here. We're up a little bit higher here in the futures market. Tom, the S&P is up about 0.3%, just hitting new highs seemingly every day here, up about almost 4% year to date after those big 20-plus returns in both 23 and 2024.
Yeah, but looking at the equity stories out there, the narrative, I like that, the narrative here. Alexandra Semenova writing it up. Equity bulls see record in cards despite tariffs. Is it more about despite tariffs, or is it more about all the politics going on?
Yeah, it's a lot of cross currents out there. Yeah, absolutely. So we've got reciprocal tariffs, a lot of tariff talk, and a lot of talk about geopolitics and who's going to be leading that going forward.
We'll have to see. Alexandra features Julian Emanuel of Evercore ISI. We thank him for his daily work here. Since year end, the chart's beautiful. S&P 500 has gone up mostly nowhere since year end, but still it's elevated. It's got that up feel. Again, the VIX 15.53 right now. From the Interactive Broker Studios for all of you across the nation, Bloomberg Business Flash, Lisa Mateo.
And U.S. stock futures edging higher with the S&P 500 within striking distance of a fresh record. We'll go to the S&P right now. Futures up 0.3%, 21 points. Dow futures up 0.1%, 77 points. And NASDAQ futures up 0.3%, or 86 points. We have the 2-year yield at 4.28%, up 1 basis point. The yield on the 10-year, 4.52%. That's up 4 basis points. To commodities, have to go to COMEX gold, $2,930 an ounce. Gold Goldman Sachs actually raised its year-on-year gold target to $3,100 an ounce. We go to oil. Brent crude $75 a barrel. WTI crude $71 a barrel. More Fed speak. We had the Fed's Christopher Waller said recent economic data supports keeping rates on hold, but rates could pick up later this year if inflation behaves like it did back in 2024. Tesla, what's leading the gains among the Mag 7 stocks? That's up about 0.5%. But right now, looking in with NVIDIA, they're up about 1.5%. And speaking of Tesla, ramping up its recruitment efforts in India. This comes just days after the country's prime minister met with Elon Musk. It posted about 13 job openings in the country on its LinkedIn page. And finally, Honda and Nissan back in the spotlight again. The Financial Times reporting Honda willing to restart those takeover talks if Nissan CEO steps down. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. And now, folks, the most important conversation for global Wall Street that we have today, and Paul, I would say the first quarter.
Oh, boy.
Robert Schiffman, for him to put out one fancy piece for Bloomberg Intelligence is like a treat. But we've got three. We've got four. Amazon may have 100 billion plus of M&A firepower. Why Cash King Apple's 97 billion of debt lags riskier peers. What's the central sum of your four brilliant articles recently?
Well, I was actually hoping on an early Tuesday we'd get a chance to talk about the Mets, or maybe a little bit about hockey later in the week, since I am becoming a regular on this show.
Thursday, I think we can do that. We can arrange it. Can we arrange Thursday, like to talk Sidney Crosby?
Well, it'd be Friday morning. The game's Thursday night.
Well, okay, we can do Thursday,
in your
Friday,
part of the world,
whatever.
TD Garden.
Mets we don't do. I mean, Mets, we do it, but Lisa insists we do it, but, we don't. Tell me about the sum of your work. What's the one message for people that own or are angry they don't own the Mag 7?
Yeah, we're trying to just simply demystify uncertainty. There's been so much concern post DeepSeek earlier this year that the world has completely changed, and that all the capital that all these hyperscalers have been putting into AI is for naught, and that these massive semiconductor companies, particularly NVIDIA, is sort of just going the way of legacy technology, and I don't think that's true at all.
So from a credit perspective, how do investors look at these big tech names? I mean, the free cash flow is just extraordinary, and they've been spending a lot of money on AI. Are the credit investors concerned here, the creditors?
Quite frankly, credit side is happier than ever, particularly when the use of capital shifts. Typically when I'm here, you're asking, why aren't these companies raising dividends more?
Right. That's my question.
And I say that actually doesn't make a difference for equity valuations. In this case, what's been happening over the last 18 months or so, particularly over the last 3 to 6 months, is that capital allocation is now shifting from returns of capital to uses of capital for organic growth. We are seeing such a blow up in CapEx budgets like we've never seen before. If you go back just a few years ago, a handful of years ago, names like Meta, Alphabet, Microsoft, they were spending $5, $10, maybe $15 billion a year in CapEx. Those numbers for the next 12 months, Meta's going to spend $65 billion.
And you're not worried about that?
I'm not worried at all.
Why?
Think about
Why are you not worried? If Lisa's kids were at home doing that, she'd be worried. Why are we not? Paul, what's the sum? It's like $200 billion or whatever.
Yeah, it's okay.
Why are we not worried about them spending it irresponsibly?
Well, because the alternative is you're basically, from a creditor's perspective, you're flushing it down the toilet if you're buying back shares. The reality is, I don't know if you guys have ever heard this phrase before, you got to spend money to make money. So when you're in Amazon and you're trending in the next few years towards $1 trillion of annual revenues, how do you get there? If you're an Apple or a Microsoft, how many more iPhones can you sell? Or how many versions of Word can you sell? You need new products and services. The vast majority of those core services that you have, you now need to lay on much higher margin services. And that's where this capital spending comes in. The reason why these stocks continue to go up is because there's anticipation for massive growth following this CapEx spending. I would much rather have Amazon spend $100 billion building data centers so they can provide AI services over the next 5 years than giving it back to shareholders.
This is a treat. We got Marc Champion on deck in London. We're going to go to him, of course, on what's happening on the continent. But for Global Wall Street, without question, our interview of the week, Robert Schiffman of Bloomberg Intelligence on the gajillions of money that Paul Sweeney wants to be an increased dividend at the Mag 7.
So, Rob, it was one thing for Microsoft, Amazon to go out there and raise billions of dollars in the debt capital markets because interest rates were essentially zero. How about today, with rates higher, does it still make the same sense for them to go out and tap those markets, even though they're all gushing free cash flow?
Yeah, so when you think about the simple math, obviously interest rates are higher. So if you look at what coupons are, average coupons for most of these Mag 7 names are sort of in the 3% range. And, when you've got treasuries where they are today, you're going to be borrowing a lot closer to 5%. So the simple person would say, hey, let's just wait till rates go down. That's the same as if you're buying a house. Sweeney, when you're thinking about putting up another $10 million house in the Hamptons, right? Yes. You don't wait for rates to go down. You do it because there's value today and there's going to be a lot more value tomorrow, and you want to sort of enjoy it. I think what happens is there's an ability to lower your cost of capital. This is simple math. The weighted average cost of capital is really what matters. It's just not the absolute cost of debt. When you think about the absolute cost of equity, let's say it's around 10% for all of these companies. But the cost of debt, even if it's 5%, if the debt percentage of your total capital base is only 5 or 7%, it would argue these companies should be issuing tens of billions of dollars in debt right now, lower their weighted average cost of capital, and either reinvest it back into their business or give it out to shareholders.
Well, that's what I want to say. You alluded a number of minutes ago that you thought share buybacks were not an efficient use of money. Speak to the new CFO of Apple about that right now. They have codified share buybacks as part of their financial plan, right?
Yeah, well, listen, the beauty of these names is that even with all this amount of money that they're spending, there's still more that's coming in. I think,
your chart on Amazon is stunning.
Well,
absolutely stunning.
We've argued Amazon actually can do everything. So Amazon has not bought back any stock for the last couple of years, unlike their peers who've either had dividends for a while or inaugurated dividends in the last year or so. They've actually just been pouring their money back into the business and building cash. Amazon's sitting on over $100 billion of cash. The argument for why they're doing that is that Amazon is going to spend over $100 billion in CapEx this year. And that number, who knows, it could grow to $150 billion in the next couple of years.
But they keep making money every 90 days. That's the heart of the shift.
That's the beauty. I've said this before. It's like when you go out to a restaurant and you order a nice bottle of wine and you've taken a few sips and the waiter comes over and he tops you off. That's what free cash flow is for these companies. It just keeps pouring in. So they're lucky that Paul, there's an excess.
The restaurants I go to, they don't top off.
Hey, Rob, covering the media industry as I did in my career, I was comfortable, and I think equity and debt investors were comfortable with leverage levels of 3, 4, 5 times net debt to EBITDA. How about for these tech companies? Where should they be, do you think?
Well, I think they should be pretty close to zero on a net basis, which is, the amount.
They have so much cash on their balance sheets.
Yeah, I mean, here's the reality is that, the tech business, things are changing. Like, there's dominant players that are out there, and their business positions, they're building such big moats. Like, the concern of DeepSeek is that the moat, the protection that they have by spending so much, might not be as big as people thought, and the barriers to entry are actually smaller. I completely disagree. That being said, if you don't stop, if you don't stop, you can never keep going. And I just think that these fears are completely overblown.
One final question. I want you to talk about the culture of tech boys, if you will, I guess, and tech girls as well. Is there some snobism here about not using debt? Are they reading Zvi Bodhi up at Boston University and saying, this is our take on corporate finance? Or is it almost a cultural thing that they don't want to do Merton and Modigliani 101?
No, listen, these are really smart people in these treasury groups running these businesses. And I think that you need to have, all this firepower that we talk about is a little bit of fantasy. it's easy to say, why don't you spend another $100 billion? But if and when things do change, whether there's geopolitical issues, whether there's regulatory issues, you need to have such an excess of flexibility that under any environment, you can still spend and you can still grow. So I don't think that's going away. I do think, though, that this whole concept of leverage, it does matter more as you go down the BBB scale, and you're not talking about Mag 7. When you're talking about the smaller semiconductor players or the smaller hardware providers, the servers, the storage makers like the Dells, that's where it really matters. But I don't think from a finance perspective, these guys are wrong. I just think that they're conservative, and quite frankly, it's worked. It's worked for both the bonds. Ratings are as high as they've ever been. It's worked for financial flexibility, and it's also worked for the equity. So listen, I shouldn't necessarily be running Treasury at Apple, though I think I could do a pretty good job. I think they're just being a little bit conservative because it's still working.
Mark, Mark is next. Rob Schiffman, this has been absolutely phenomenal. I can't say enough, folks, about his work. It is at Paul Sweeney's Bloomberg Intelligence. Can't say enough about that. You get it on the terminal. Brilliant charts. They're in English. It explains so much of this Mag 7 that we're living. When we invented Bloomberg, Rob Schiffman, thank you. When we invented Bloomberg surveillance, what it was about was to go to a world-class conversation like Rob Schiffman and then move right over to Marc Champion with Bloomberg Opinion and, of course, encyclopedic on the continent of Europe. Mark, I want you to give me an arc of the moment in Europe. I take great offense, whatever anyone's politics, with a British newspaper giving me Neville Chamberlain at Munich and whatever's going on now. What's your analog with all your excellence, Marc Champion, to where we are right now?
Well, I think the better analog is what President Putin did in 2007 at the very same conference in Munich that Vice President Vance spoke at, and this weekend. And what he did there was to just put the West in general, Europe and the United States, on notice that he was not going to play by their rules anymore, that he felt that Russia had been cheated, and that he was going to assert Russian interests from now on any way that he felt was necessary. And a year later, you had a war in Georgia. You've then had wars in Crimea, etc. So it was very consequential. What happened this time was essentially the United States saying to Europe, we are no longer on the same page. We are no longer going to give you the sort of total security guarantees that you have enjoyed since the end of the Cold War, since before during the Cold War. And we're going to move on from here. He also talked about why it is that he thought that Europe and the U.S. were no longer shared values, and he got involved in trying to determine who the next leaders of Germany should be. So it was a big shock for Europe, and may well prove consequential, as 2007 did.
And listen to this language, Paul. This is from Amory Horton. This is a State Department readout. Establish a consultation mechanism to address irritants to our bilateral relationship. Now, that sounds like I'm talking to a 17-year-old daughter named Afterthought. But, that language, Paul, is so vague to address irritants.
Exactly. So, Mark, where does that leave NATO?
Well, so NATO is at the same time, as people always say, the most successful alliance in history, etc. But it is based on something that was always very fragile, which is the faith in Article 5. The faith that, if one country is attacked, no matter how small that member of NATO, if it's attacked, then, the rest of NATO, and that, most importantly, the United States, would pile in to defend them. And so the real kind of worry for Europe in this kind of talk is that, what you're really saying is we're not sure about Article 5. And, it's not just whether Estonia or Poland believes in, that that's the case and that they start to be worried about whether the U.S. really has their back if Russia was ever to attack them. It also, even more importantly, is whether Russia believes that security guarantee remains, because and most importantly, it is a deterrent. It was, the whole purpose of NATO was never have to fight the former Soviet Union or, anyone else after the fall of the Soviet Union. So that is what really worries people in Europe.
So, Mark, if that were to be the case, is there a belief within the European Union that the countries can in fact step up their defense spending and make up for some of the American support?
Well, I mean, that is what they're talking about trying to do now. It's always been possible. The problem is that they've known that they needed to do this for, more than a decade. They have increased their defense spending a lot in recent years. But nowhere near enough, and they started far too late. They've also are not very efficient in the way that they do it, and therefore they have to recognize, they do recognize that they still are not able to defend themselves without the U.S.
Right. Mark, I got to squeeze this in. I think it's too important. One of the 14 threads of this over the weekend is that the U.S. or whoever will exit the Baltic region, the Baltic states, defense of the three, Estonia, Latvia, Lithuania, that we will hold Finland less protected. How will Mr. Putin respond to that? Is that like the gift of gods to the Tsar of Russia?
Yes, in a word. It's slightly more complicated in that he's, I think, quite unlikely to go after Finland. Finland's actually quite well protected. It has more artillery pieces than Germany, France, and the UK combined, for example.
Wow.
And so, but yes, the Baltic states are another matter. They, in terms of sort of share of GDP, one could say that they spend pretty decently, but they are tiny. And they are definitely, in what Putin considers as the proper sphere of influence of Russia. So, if it succeeds in Ukraine, he will be interested in Moldova, for example. He will be interested in the Baltic states. How he does that, whether by hybrid means, by different kinds of coercion, whether he just invades, but I think the real concern for them would be that that's the logical place if he wants to test whether Article 5 really exists anymore.
Not enough time. Marc Champion, thank you for your work, 24 hours, 7 work to explain all of this for all of us across America. Just huge value add. With Bloomberg Opinion, look for Marc Champion. I'll get his work out on social here as I can through the morning. Futures advance up 24. Dow futures up 83. A lift to the market. It's a Sweeney bull market. 2-year yield. And where's the 30-year mortgage, Paul? I mean, it's
just below 7%.
Just below 7%.
But still, yeah.
Were you taking notes there? Schiffman was saying, climb on in.
Yeah, absolutely. I mean, let's issue some debt here.
He was very optimistic, to say at the least. From New York City, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we've got trading picking up after the holiday. Futures right now advancing. We have NASDAQ futures up 0.4%, 105 points. Dow futures up 0.2%, 97 points. And S&P futures up 0.4% or 25 points. The two-year yield at 4.28%, up 2 basis points. The yield on the 10-year 4.52%, up 4 basis points. On the economic calendar this week, we have a read on Empire Manufacturing. That's today. We also have this week housing starts, building permits, initial jobless claims, and existing home sales. Warren Buffett's his latest stock picks. Well, they're starting to spark some moves in individual stocks. For example, Berkshire Hathaway took a stake in Constellation Brands. Their shares up about 6%. It also added to its stake in Domino's Pizza, up more than 1.5%. But it ditched the rest of its position in Ulta Beauty. Those shares down about 1%. Intel shares are up about 5%. The Wall Street Journal reporting Broadcom, TSMC, they're eyeing separate deals that would break the chipmaker in two. And finally, Chinese tech company Baidu. They posted lower revenue for the third straight quarter, although it did double its profit, but its ADR is down more than 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Podcasts. I was reading this weekend about this science I don't really understand. And Paul, it's simple. YouTube podcasts is just exploding.
Yep.
There's like others, Apple Podcasts, this, that, and the other. But YouTube is really growing. Shout out to YouTube Premium. You spend a little more money and it gets rid of all the noise. You get Lisa Mateo ad free. I mean,
beautiful.
How perfect. Yeah, exactly. Beautiful. And that's a good thing. We get a huge response when Adam Farstrup is in. He's with Schroders. He's got some fancy title, head of multi-asset, but what he's really, really good at is, okay, this is how you avoid the noise. His note from Schroders is just brilliant. Get it from Schroders. We protect the copyright of all of our guests. You have the most single calming note I've seen in an age of, like, the last 4 days has been less than calm. I don't believe you. How do I avoid the noise to participate in this equity market that goes up and up? What's the how do I do it?
Well, I think you have to think about where are we in the economy? It all goes back to that. Why are the corporate earnings strong? Because consumer spending is strong, right? The job market is still very healthy. We're not seeing the cracks in that. And I think we're still sort of in this overhang of concern that somehow a slowdown is coming. We don't quite believe it because valuations are very rich. But fundamentally, the U.S. economy is in a very strong spot. The biggest concern is the concentration in the market.
So that Mag 7 has been an issue for, I would argue, since 2023. How much of a concern is that for the market?
Yeah, exactly. I mean, we saw, the news of DeepSeek, how quickly things can change. But the reality is, we think it's about broadening your exposure without being short the Mag 7.
Okay.
Right?
So if I broaden my exposure, where do I go?
Yeah.
I mean, do I play a Trump trade, financials, and all that kind of stuff? Do I play a better economy, which is going to help cyclicals? How do I play?
Sure. So the Trump trade is noisy, right?
Okay.
And I think we've seen lots of volatility in that. So I think we have to go back and say, where is this economy supporting good earnings? Certainly financials. That trade is far from over. So when you think about barbelling a portfolio in U.S. equities, financials look very attractive to us given the shape of the yield curve and the deregulatory impulse that we do see coming there.
Do you, on theoretical basis, do you want to be more diversified, less diversified, sector specific, or individual stock specific?
So I think there's two aspects to this. One, you want to be geographically diversified. There is so much heat on the U.S. right now that actually we're seeing opportunities emerge now in Europe. And so while the European economy itself has some challenges, the loosening of policy from the ECB, some of the valuations that are attractive there, I think there's an opportunity to just spread your bets there. But your other point about, do you go stock specific? And we were traveling and we met with a client 2 weeks ago who said to us, we used to actively go passive and now we're passively going active because of the concentration in the indices. So in our portfolios, we have a lot more stock picking. We're macro allocators. We used to expose ourselves to the S&P 500 passively. Now we like the idea of being active because differentiating within the Mag 7 has become important.
So how do you differentiate between the Mag 7? Are you heavier weight in Amazon, lower weight in Apple, or how do you guys do that?
Yeah, you just had that phenomenal interview about CapEx in the tech space.
Robert Schiffman, brilliant.
Absolutely
Scary
brilliant. And so I think looking at where's that earnings power, where's that cash flow generation versus where's the growth slowing, the story between Amazon versus Tesla are very different stories right now.
How about fixed income here? I mean, I'm very happy with my 2-year Treasury, almost 4.3%.
Yeah.
I'm not taking any risk. I can sleep well at night. Do I just sit there, or I take some credit risk?
I think you want to take credit risk, but you want to be careful where you take that. Right? It's very clear that investment grade credit in the U.S. there is no spread, and even on a total yield basis, it's not that attractive. If you look out to European high yield, where interest coverage is high, quality is high, you're getting, on a hedged basis, back to dollars, 7.5% yield. So if I'm going to clip the coupon, let's go where the coupon looks attractive.
Interesting. So again, in the fixed income space here, do I stay short? Do I go longer out on the curve? I mean, a lot of folks tell me I'm maybe not getting compensated for duration.
So we think that the front end of the curve looks like where our expectations are, which is that the Fed is not going to cut very much from here. But the long end of the curve, there's lots of volatility potentially baked in. And unless you expect the U.S. economy to suddenly slow, I don't think you're going to get the price appreciation there. So we're staying cautious on the long end of the curve.
What's the far strip exuberance meter this morning? Do you sense, Paul and I, like Friday was whack-a-mole. The divergence of strategist views. I think I can say, folks, in umpteen years, I've never seen it. And we've got some news here from Ukraine I'll go to, which will explain the rumors and all that. Is there exuberance out there at these highs with futures up 23?
Well, we're seeing reports that actually retail investors are not exuberant, that they're very concerned right now.
Agreed.
And so I think the challenge we keep coming back to is this valuation split between the Mag 7 and the rest of the market. Our bet is that there's a catch up. And so that's why we keep talking about this broadening trade I've been talking about this morning. So I'm not as concerned about exuberance. If you are, now, you always have to have hedges in your portfolio. We do think that the dollar, particularly against the renminbi, against the euro, is a good hedge in portfolios today. And we continue to bang the drum for gold. Gold, with all these geopolitical
What's your target
concerns.
on gold? I got to make some news this morning.
We don't have target prices. We just like it.
It's British.
Yeah, exactly. We like it because when you think about the risks to the equity market, particularly concerns about U.S. government policy or geopolitics, gold is brilliant.
I got to run to some news here on Europe. This is just, don't be a stranger. Adam Forster with Schroders. I make jokes about it, but the note is brilliant with some really informed charts. Gold now not 3,000, but getting there, 29.31, up $31. I want to explain how we do news right now for all of you on your morning commutes across the nation. Apple CarPlay, Android Auto, and the corridor, 99.1 FM Washington, up to a frigid Boston, and up on north Mount Washington. Wow. Couldn't believe the wind chill there was minus 60 below a couple days ago. And on YouTube worldwide, Paul and I are sitting here in a turret with lots of help from really good people trying to keep the news flow going. There was just a report on Twitter. It was a lengthy report from a good authority. And the language starts, the U.S. and Russia are proposing. Okay, fine. I didn't go with it because the language was just too strident and not hedged. Anne-Marie Horton had a beautiful tweet out, very hedged, very like, we're really not sure what's going on, but this seems to be the tone. We have a headline coming out moments ago from Bloomberg, U.S. only, quote, floating, unquote, Ukraine election idea, a U.S. source tells Fox. And I just want to explain that this goes back to that Matt Winkler's going to join us later, Paul. This is back to Matt Winkler's heritage of just sourcing. And trust me, Tom Keene's gotten it wrong before, I'll tell you. but we're trying every step we can to give you sourced news rather than rumor and speculation. We're just trying to avoid it like the plague. And right now, given what's going on, it's brutal.
Yeah,
I mean,
it is.
It's just brutal.
I mean, the Bloomberg reporting here, top U.S. and Russian officials held talks in Saudi Arabia on Tuesday to discuss how to end the war in Ukraine without anyone from Kiev involved, fueling concerns about a rapid push for a deal by the two powers that may leave Europe on the sidelines. So that's kind of the lead paragraph for Bloomberg News.
A lot of uncertainty there. I thought Adam Firstrup was great there about listen to it and be aware of what's going on. Dollar with some strength, 107 on DXY. On YouTube, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures pointing to a higher open. This is after the President's Day trading holiday. We have NASDAQ futures up 0.4%, S&P futures up 0.3%, Dow futures up 0.1%. The 2-year yield at 4.28%, up 1 basis point. The yield on the 10-year 4.51%, and that's up 3 basis points. To commodities, we have COMEX gold, $2,934 an ounce. I want to point out oil, Brent crude $75 a barrel, WTI crude $71 a barrel. We have the Bloomberg Dollar Spot Index up about 0.2%. Few companies making news. Southwest Airlines makes its first layoffs in its history to reduce costs. Now, the carrier is going to cut about 1,750 jobs in its leadership ranks. That's impacting about 15% of its corporate positions. Its shares up nearly 2%. And shares of Delta Airlines are off about 1%, and that's after one of its regional jets flipped out of control, landing in Toronto yesterday. All 80 people on board did survive. And finally, shares of Nike up 2%. Well, the reason why, we heard that Kim Kardashian shapewear company is going to enter into a partnership with the company for Nike Skims. Yes, it's a brand for women, training apparel, footwear, and accessories as well. That is your Bloomberg Business Flash. Paul and Tom.
Can't keep up?
I can't keep up.
No, I'm silenced. I don't know. What do you do after that? She's everywhere.
We should mention this. Well, I mean, the only way I can get the kids to talk to me is Nutella crepes.
Oh, yeah?
I mean, that's the bribe.
Okay, that's how you roll.
I mean, the gentleman that founded Nutella, I don't have it in front of me, he died over the weekend at like 87, 88 years old, and the founder of Nutella. Afterthought just was in black. She's wearing mourning and, whole thing. Futures up 24, Dow futures up 83. This is important in that we have Tobin Marcus with us. He's had a policy at Wolfe Research, but far more than that, withstood the White House within the Biden administration, providing policy and economic perspective. He's qualified given the way your head's spinning and my head's spinning because he's out of physics at Brown University. I remember sitting in quantum mechanics, surviving Schrodinger equations, and then Heisenberg showed up. How dare he? And there's an uncertainty principle now. If you have two particles, you can focus on one, but the moment you focus on one, you lose sight of the other. It's a whole important idea within the magic of quantum mechanics. Tell me the quantum mechanics now of our diplomatic efforts in America. We can focus on one thing, but then the other things drift away, it seems, instantly.
Yeah, I mean, look, the focus is, I think, shifting rapidly. The Europeans certainly are trying to get their heads around it. But I mean, coming out of the Trump administration, we're seeing certainly an attempt to move forward on a lot of different dimensions simultaneously. We have obviously this diplomatic effort out of Ukraine. The Europeans simultaneously are very, very concerned about what Trump's tariff rollout last week could mean for them. It's a lot of moving pieces.
You were with the Biden administration. Would you suggest that the Biden administration did not move forward?
Well, I worked for Biden in the Obama administration, somewhat longer ago.
Okay. But did they not move forward? I mean, what we're getting now is initiative. If I'm a Trump supporter, I'm saying, look, we've got initiative now.
Yes, I mean, certainly, I think the latter stages of the Biden administration were somewhat listless. They came in with a lot of ideas, were, faced a challenging global landscape. But, certainly you look at places like Ukraine. I don't think that we saw a lot of progress over the course of the past couple of years. Sort of theory of the case. After the big, counteroffensive that they tried to prepare the Ukrainians for, which didn't really succeed, I think mostly we were kind of holding ground for the past few years.
So I guess one of the bigger issues that we're all coming to grips with over the last couple of days is this kind of transatlantic relationship that has been in place since the end of World War II. Against maybe, to challenge the USSR, now Russia. Is that fundamentally changing now, right before our eyes?
Yeah, certainly the incoming administration does not look very, transatlanticist. They're looking at our alliances in Europe through a lens of American self-interest, and I think they're not convinced that the current set of structures that we have in place is really serving us.
So where does Europe go from here, do you think? Because it appears like the U.S. policy seems to be pretty clear here in terms of we're going to drive this ship, and if you want to come on board, great. So how does Europe respond, do you think?
Yeah, they're reeling. I don't know that the Europeans have the level of internal cohesion that they need to formulate a sort of alternative strategy. I mean, there's been lots of talk for years now about the European Union emerging as a full-spectrum geopolitical actor, but thus far, they've not really been able to get out of their own way.
My essay of the weekend off Mario Draghi's Chatham House work of, 6-7 months ago was a brilliant essay in the FT where he said Europe has self-inflicted service sector tariffs with all their regulation, which he and his team calculate out to 30, 40, even 45% tariffs. The zeitgeist this morning is the markets are okay because tariffs don't affect markets. Do you agree with that summary?
Well, they certainly haven't affected markets a lot so far. It's been striking the extent to which markets have looked through them. Even, the China piece that actually already happened, it's equivalent in scale to the entire 2018-2019 China trade war, and we shrugged it off completely in markets because we didn't simultaneously do 25% on Canada and Mexico. But if you look forward, the reciprocal tariff rollout last week was greeted with relief because it wasn't taking effect right away. We never thought it was going to take effect right away. But the numbers that we could spit out if we're looking at VATs alongside tariffs are incredibly high. I mean, they're north of what Trump was talking about on the campaign trail. You're looking at 20, 30% tariffs all in on a lot of these countries if you're just adding up their tariffs and their VATs. So I think it's a little premature to be too relieved.
So what are you telling your clients these days about the inflation risk associated potentially with tariffs, with changes in immigration law, for example?
Yeah, no, certainly. I mean, they're both stagflationary shocks of different extents. On immigration, there's been a lot of ink spilled about deportation. I think it's been somewhat underappreciated. Right. What's going to happen to people who are already here, who stand to lose their work permits? So the big impact there. And on tariffs, I mean, look, we have what's already happened on China that's meaningful but not world-changing. If he goes through and does exactly what he said last week on reciprocal tariffs, that's very inflationary.
So quickly, folded into Wolfe Research's belief in the equity market, do they take the world of Tobin Marcus and say, we can not ignore it, but we can at least prosper within this maelstrom?
Yeah, no, we're not sort of market-wide bears on equities. I think things can continue working. They certainly have so far.
Right.
From a rates perspective, we're at no Fed cuts this year for sure. I think that's one impact that we're seeing clearly in terms of what this all adds up to. Ongoing debate, but that's where
Fascinating. Come back tomorrow when the news completely changes. Tobin Marcus with us, Wolfe Research, here this morning. Futures advance, highs for the day up 24. Dow futures up 78. With our news in New York City, John Tucker.
All right, Tom, top U.S. and Russian officials held talks in Saudi Arabia this morning discussing how to end the war in Ukraine without anyone from Kyiv involved. And that's fueling concerns about a rapid push for a deal by the two powers that may leave Europe on the sidelines. A senior Russian official said after the meeting, which lasted roughly 4 hours, that no date had been set for President Vladimir Putin and his counterpart Donald Trump to meet. A Delta Airlines regional jet flipped out of control after landing in windy, freezing conditions in Toronto yesterday, skidding along the runway and coming to rest upside down after losing its tail and one of its wings. 15 people were injured, 3 critically in the accident, though nobody was killed. Toronto Pearson Airport Fire Chief Todd Aiken.
The runway was dry, and there was no crosswind conditions.
Well, the regional airliner, which was flying from Minneapolis-St. Paul to Toronto Pearson International, had 76 passengers and 4 crew on board. Severe winter weather slammed the eastern seaboard over the weekend, killing at least 15 people across several states. Let's get an update now from Bloomberg meteorologist Rob Carolyn.
John, the storm system that originated on Saturday in the lower Mississippi River Valley and brought very heavy rain to parts of Kentucky and the southern Ohio River Valley, that went across the Northeast Sunday, producing snow, sleet, freezing rain, and rain from New York and New England. On the backside of the system, we've had very strong winds. Yesterday, we saw gusts between 60 and 70 miles an hour across portions of New York and New England. That brought trees down, some of which had been laden by the ice that fell on Sunday. That storm is locked up in eastern Canada. It'll produce strong winds again today across parts of upstate New York, southeastern Ontario, Quebec, and into New England. I'm Rob Carolyn, Bloomberg Radio.
Thanks, Rob. And Republicans are weighing billions of dollars in cuts to Medicaid, threatening health coverage for some of the 80 million U.S. adults and kids enrolled in that safety net program. To whittle down the budget, the GOP-controlled Congress eyeing work requirements for Medicaid. It's also considering paying a shrunken fixed rate to states. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom, Paul, Lisa.
John Tucker, thanks so much. We need to emphasize, folks, we do international relations. We've listened to you, and you want to be aware of it to fold it into your market call. Paul, the NASDAQ's up 0.5%. I did not expect that today.
No, I mean,
it's just a lift.
Yeah, it is. It is a lift, and we've had a strong January coming into February now.
We'll have to see. We'll keep on that. From New York City, worldwide, this is Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Sweeney Tantrum. Tom, we don't talk enough about Duke basketball. So right now joining us, Emily Graffeo after an easy win on top of the ACC.
And the ACC is way, way, way down this year. I don't know what's going on, but we've got like nobody who's any good, including Carolina.
Help those that aren't smart. The SEC
is
not Arthur Levitt. That's
the SEC's got
basketball.
Everybody in the top 10. Even the Big 12 is good. The Big 10 is good. The ACC, who is usually, Tom, the basketball powerhouse conference,
right.
no
Thank
more.
You.
And I think that's because they have not played or played well the NIL game, name, image, and likeness, the money, and they've not played the portal game well. Whereas these other conferences, like, yeah, we know how to throw around money to basketball players.
Did you realize you totally changed how we talk? This is great. Emily, thank you so much for coming in for Sweeney.
Yeah, she wants to talk ETFs, but we're talking
What do you call
ACC.
it? Name, image?
And likeness.
NIL.
NIL.
It could be an ETF ticker.
NIL?
Yeah.
Joining us now, the queen of NIL, Emily Grafeo, with us this morning from UVA, and of course her great work here. I'm going to do an audible to you right now. I found in London, issued this summer, a 5 times Mag 7 ETF. It was up 670%, and it's enjoyed going down 50%, losing half its value in 5 weeks. What does it say about your world, Eric Balchunas' world, that we've got the con job of 5-time leverage as a way to make money? It's a roulette wheel.
It's an industry where, most of the products that are just what Balchunas would call plain vanilla, your index tracking funds, all the big asset managers have already done that. So if you're a new player in the game and you want to figure out a way to make money, you have to go extremely far out on the risk spectrum and launch something like 5 times Mag 7. Now in the US, we only have the most leverage you can get on an index-based ETF is 3x.
That's like a law?
Well, I don't know if you could technically call it a law, but that's what we've only seen the SEC allow. And then we've only seen the SEC allow 2x on a single stock. But that could change under the new SEC.
Most of the money, though, just goes into the S&P 500 index thing. Vanguard is now unseated State Street as the biggest player.
Yes.
That's kind of big to me.
This was exciting news this morning for anyone who follows the ETF space closely, because SPY is one of the oldest ETFs.
That's what I put in my
And that's typically, it's been the largest. It's at $630 billion. And now VOO, V-O-O, which is from Vanguard, is now about $632 billion. So now it takes the crown.
How did it do that? How? What's the why here? How did that happen?
Flows were relentless buying from financial advisors and retail. It's 3 basis points, whereas SPY is 9.5 basis points. That's more of a trader institutional ETF. VOO is the set it and forget it, just keep buying, buy S&P 500.
And the fee is 0.03 percentage points.
3 basis points.
0.00.
I'm not even going to ask how they make money. I don't understand.
I can't. I don't have a math.
I'm back into 2 to 3% mutual funding.
How does anybody make money?
No idea.
In the ETF business, if
we pay about
it's 3 beeps.
They have to launch 5x Mag 7 ETF and then make it cost 90 basis points. That's what we're seeing. The new ETFs that are launching are actually
okay. So
more
what's
expensive.
the new thing in crypto? That's why we had you in originally here.
Right. The new thing in crypto is that altcoins, so there's Bitcoin and there's Ether, those are your mainstream cryptocurrencies.
Sure.
Now the product press on Wall Street is trying to put altcoins into ETFs.
What's an altcoin?
An altcoin,
Lisa, take notes.
Solana, Litecoin, these are other kinds of cryptocurrencies that essentially there's been a question as to whether they're securities or commodities. The old SEC would probably say these are all securities and you can't just
Are they
throw them in an
daffodils or
ETF.
tulips? They sound like tulips to me.
Yeah, potentially.
Emily Grafeo, next year for UVA basketball. Thank you so much, Emily Grafeo, with this. There have been tones across the time of the USSR, the Beatles.
Back in the USSR. Been away so long I hardly knew the place. Gee, it's good to be back home. Leave it till tomorrow to unpack my case. Honey, disconnect the phone. I'm back in the USSR. You don't know how lucky you are, boy. Back in the US, back in the US, back in the USSR.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning. morning, everyone. Tom Keene, Paul Sweeney, Michael Barr on assignment. We'll talk about that. Lisa Mateo in today. Fired up out on YouTube. Live chat on YouTube is a reason to subscribe to YouTube so Sweeney can translate this for me. The greatest says Louisville to SEC to hopefully. So like really? Louisville's with Duke in the ACC,
yep,
and they would go with the other guys.
Who knows? I mean, everybody's just.
Is it just about money? Can I
totally
suggest?
About money. I mean, we had the kids from Cal, Berkeley, and Stanford fly all the way to Durham to play basketball.
Did Rick Pitino escape? Is that what he really did? Was escape the madness down south to come?
Well, now
he's at
St. John's, and just the Madison Square Garden was rocking yesterday with St. John's. The city's totally fired up with St. John's.
And the Knicks doing well too. We thank Barry Ritholtz for his seats were closer to the court than yours.
I know. I don't know
he
how
was
that
like
happened.
3 rows ahead of you.
Exactly. He's Chris Rock.
One of the NBA guys was in his lap. They were so close. Yeah, it was. I mean, that's the way we roll. Thank you for that. Out on YouTube on Louisville. Good morning to all of you down south where it's slightly warmer than it is up here. We got a really important interview coming up here. Lori Calvasina will join us. Paul had a tantrum and said we got to get her in to talk about being in the market. And again, even Russell 2000 up 0.4%. There is a lift to the market this morning. Why don't we do that? Why don't we get right to the Bloomberg Business Flash from the Interactive Broker Studios? Lisa Mateo.
Yeah, futures are edging higher this holiday shortened trading week. We have NASDAQ futures up 0.5%, S&P futures up 0.4%, and Dow futures up 0.1%. The 2-year yield 4.28%, up 1 basis point. The yield on the 10-year 4.52%, and that's up 3 basis points. To commodities, COMEX gold $2,935 an ounce. We have oil, Brent crude $75 a barrel, WTI crude $71 a barrel, and the Bloomberg Dollar Spot Index up about 0.1%. Leading the gains among Mag 7 stocks, it would be Nvidia. They're up nearly 2%. Tesla next in line, up about 1%. And then Warren Buffett's latest stock picks, they're sparking some moves in individual stocks. Berkshire Hathaway took a stake in Constellation Brands. Their shares up 5%. It also added a stake in Domino's Pizza, up about 1.5%. But it did ditch the rest of its position in Ulta Beauty. Those shares down about 1%. And Intel up more than 4%. The Wall Street Journal reporting Broadcom, TSMC, they're eyeing separate deals that would break the chipmaker in two. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. They put a tracer on me this weekend, because they had danger. And I went into the bathroom of the child, afterthought. Oof. I counted 32 bottles of Ulta Beauty, Sephora Beauty.
Here you go.
It's about the skincare.
What?
Like Alex Steele says, you have to invest in your face.
You have to invest even at a young age.
Have to invest in your face. And John Tucker and I did not get that memo.
Yes, these stores are filled with like 10-year-olds now. It's crazy.
What has changed? Is it is it now so inexpensive that it's reasonable, or?
No, definitely not the inexpensive part. I can tell you that much. But I think it's all the social media influencers that these kids are watching. It's sparking them to go out into the stores.
Yeah. Okay.
Yeah. And it's the guys as well.
Yes.
It's not just.
You're right.
Girls doing it. Young men are going crazy for all this stuff.
Yes.
Really?
3,
you know
4,
who
5,
has
6.
a line of beauty products? The Rock.
The Rock.
The Rock has a line of beauty products.
We walked into that time.
Lori Calvasina is taking notes. She goes, why am I here?
Exactly.
Joining us
She's
now
on
this equity market, Lori Calvasina joins us, Chief U.S. Equity Strategy at RBC Capital Markets. Lori, we're deep into 2025. How have you changed your tone since your 12/31/24 outlook?
Well, I would say we haven't changed any of our numbers. We're still looking at 271 on earnings, 6,600 at year end on the S&P 500. We do have a bear case ready to go, and so I would say that bear case has been somewhat more interesting to people than our 6,600 target. That's the math we do that says if you sort of bake in things like 5% on the 10-year Treasury yield, a more onerous political backdrop as opposed to good vibes, that gets you to 57.75. So maybe we've been talking about that bear case a little bit more, but we still do view it as a tail risk.
Does your bear case come from weaker, tepid economics, or does it come from weaker, tepid revenues and earnings?
So it primarily would be more on the economic side, although I think if we had a weaker economy, that would also feed into weaker earnings. And it's interesting, Tom, because we have 5 sets of models that we use to come up with our price target. And when we put the outlook together, we noticed that 3 of them were what I call sort of on the cusp of misbehaving. So sort of on the cusp of, they were still technically in good territory for stocks for now, but if they move too much, they get pushed into a more negative range for stocks. And one of those was actually our GDP model. The GDP model basically says stocks do different things in different kinds of economic environments. 2.1 to 3% GDP, typically quite strong for the S&P 500. But guess what? 0 to 1% or 1 to 2%, pretty mixed with down average annual returns. And so, if we were to take the current consensus 2.2, that's in a healthy range. But if you say shave 0.4% off that, it pushes you down into the unhealthy range.
Absolutely brilliant. And Paul, you and I talked about this earlier, the divergence that we heard last week on surveillance between the optimism, say, of Ed Yardeni and Lindsay Pieggs at Stifel, very much like Ms. Calvasina at RBC saying, what's the ramification of a sub 2% real GDP?
Exactly. And Laurie, I'm just looking at the Bloomberg terminal here. We've got about 390 of the S&P 500 companies have reported earnings this cycle here. About 5% sales growth, about 10, 11% earnings growth. That seems pretty good to me. Is that good enough in a market where I don't think the Fed's going to do a lot for me this year?
Yeah, so I don't think you're going to get multiple expansion, right? And if you're not counting on lower interest rates or substantially lower inflation, it's going to be hard to see how the multiple can really move up. That's just, based on our math going back to the 60s. And the earnings growth dynamics, I would say they're pretty solid if you think about sort of the foundation that we're on at the moment. If we look forward, I will say the uncertainty that's emanating out of DC does seem to be impacting companies. And so at the beginning of this reporting season, the commentary was full of optimism. And now we're getting that optimism really clouded by uncertainty. Uncertainty seems to have taken over the conversation in earnings calls a little bit more. So we're not seeing a big increase in kind of upward guidance. We're not seeing a big increase in downward guidance either. And if you look at the rate of upward revisions on the S&P 500, it's only about 40% of revisions to individual company forecasts are to the upside. So there are more downward revisions than upward revisions. And if you've seen the bottom up forecast on earnings move down a whopping $2 from 273 to 271. So it's a little squishy on the forward numbers. We have to keep an eye on that.
Okay, the forward numbers. I mean, help us here. I guess we're, 2/3 of the way through earnings season, even 3/4 of the way through earnings season. When do you recalibrate off of the earnings season away from the 12 large caps we talk about? When do you recalibrate earnings of the Laurie Calvasina world?
Number one, the rate of upward revisions, so kind of earnings sentiment, is still a little bit better for the Mag 7 top 10 market cap names growth than compared to, say, the rest of the market or value. But the gap is closing, and so we're starting to see value rest of market S&P X Mag 7 is starting to make up some ground there. So I think there's still a ways to go for the value cohort of the market to really kind of take over that earnings leadership. If you look at 25 and 26 estimates, Mag 7 is still expected to have better growth rates, even though those growth rates are decelerating. But certainly value is making up some lost ground. And so far, it's been enough to give you the justification for a little bit of rotation and leadership on price performance.
We welcome all of you across the nation here. Laurie Calvasina with an important interview. We're going to continue with Ms. Calvasina if we can reset with her work at RBC Capital Markets. Our technical staff will work on that. On YouTube, Good Morning out at Bloomberg Podcast is well, building each and every day with a live chat that's really helpful. It's altcoins. Tulips. I mentioned tulips. That got a big buzz.
That did, yeah.
A certain select group understood I was making a joke about daffodils.
Yep.
And I don't think Ms. Graffeo really landed on that.
Not the demo.
Yeah, not the demo. We thank the older demo for continuing with us as well. I mean, we're talking with Laurie there, and again, it's about she has an optimistic cast, but she's got a framework if.
Some of the geopolitical news, Tom.
Which is, I think, really, again, it's the uncertainty that's out there. It's just absolutely incredible. We continue with Laurie Calvasina. Laurie, the small caps, do they need a weak dollar? What is the catalyst for small caps to really shine?
So it's a great question, Tom. I don't necessarily think it's the dollar. I think that you need to see stronger economic forecasts. They're sort of in a holding pattern versus large. We are seeing better earnings growth expectations in small cap. People don't really believe them. So maybe if we see some of those come through, but usually if GDP is running closer to 3% than 2%, small caps tend to outperform.
Okay, Lori, thank you so much. We got some technical problems there. We'll move on. We got huge news flow. We'll get Lori back in studio. Can be really good with her with RBC Capital Markets. Andrei Lemshko and Diana Juka of Bloomberg have just put out, I'll call it a paragraph and a half from Mr. Lavrov of Russia. It is absolutely extraordinary. Russia and the United States agree to appoint negotiators to end the war in Ukraine. Clearly, I've got to say that has a little bit to do with green on the screen. Paul, help me here. First of all, talks with the U.S. were useful.
Yep.
Presence of NATO troops in Ukraine is unacceptable for Russia. And then they go on to, I guess, the beginning of the ballet.
And I think what was also important here, Russia and U.S. have agreed to ensure that ambassadors in Washington and Moscow are appointed as soon as possible. I mean, if for nothing else, I'm generally of the opinion it's better to be talking to people, whether it's your allies or not. It's better to be talking to them than not talking to them. It's better to be engaging with them rather than not be engaging with them. But we'll have to see to what extent, Ukraine and officials from Ukraine will be included in
or
these
other
discussions.
European nations
or other
here.
European
when you look
nations,
at the hydrocarbon issue and all the other tensions here, I mean, this has a true, do you agree with me, Paul? I mean, we're making this up as we go, folks. Help us. But the answer, Paul, is I see a real bilateral cast here away from anything to do with a multilateral approach.
Right, and that certainly goes to the speed. Maybe you can move a little bit quicker in that type of scenario, but presumably there are other interested parties, whether it be Ukraine itself, whether it be other European neighbors. So we'll have to see how this plays out. But it looks like, based upon the discussions between President Trump and Putin, that things are moving forward. And the Russian and U.S. teams have met, and it looks like they're going to continue.
Dollar strength, euro at a 104 churning, a 104.48 on euro right now. Sterling 126.03. I can't think of a period since time began where I've less looked at the Fed. A perfect time to speak to our Michael McKee, Senior Vice President, Fed Charm here. Mr. Waller made a splash over the weekend, political pro and con and all. How are governors, presidents, the zeitgeist of these smart people, how are they managing the message to the end of March Fed meeting?
You know how turtles pull their heads in when you point at or touch them? That's kind of where the Fed is at this point. They don't know what's going to happen. Waller made that clear. He is more dovish than many of the folks on the Open Market Committee, but he basically said he's operating from the point of view that we want to cut rates. But because of the uncertainty out there, we can't do it now. So we're going to wait and see what kind of additional data we get, and maybe later this year we can do that. Pat Harker of Philadelphia said much the same yesterday, because they're both talking about how there's a January effect in CPI. 7 of the last 10 Januaries, we've had higher than expected inflation.
Claudia Sam with a brilliant note this weekend out on the same idea, Paul.
And Michael, is it inflation versus the job market that is job one now for the Fed?
Inflation is their main concern. It's going to be interesting to see what happens. We get a jobless claims number on Thursday. To keep watching this and see what happens. The president, in theory, is asking his division heads to fire 200,000 people. Well, we've got jobless claims of 200,000, so that would double the number of people on jobless claims. It won't all come at once if it happens, because, of course, a lot of these firings are caught up in the courts and they may not happen and everything. But it's interesting to see that for the first time in a long time, we have the possibility of very large increases in jobless claims that might start to worry the Fed. And remember, 80% of federal employees are outside of Washington. So this is going to hit a lot of states if indeed it follows through.
Michael McKee with us, of course, legendary in economics, and what many of you don't know is he owned the political high ground as well. I'm going to do a massive audible here, Mike McKee. You were 15 years old in 1986 at Reykjavik with Gorbachev and Reagan. You launch forward from 1986 to 1993, where I completely got wrong the Yeltsin coup, if you will, Black October, the October coup. What a mess it was after, of course, 1989 and 1990. How do you perceive the Russia now that you were such a student of years ago?
I was in Moscow during that coup period as well. It was a very, very fascinating time because 70 years of history was just being erased at the moment.
And that's a history Putin wants back. He wants to steal back the 19th century.
You could get very philosophical and go back into the history of Russia and how it has generally been run by strongmen and how the Russian people are sort of used to that and are willing to do that. It's a little bit like what happened when China opened up and the Chinese Communist Party said, we will give you the possibility of prosperity as long as you stay out of politics. And that's kind of where the Russians are at the moment, but the problem is the war is creating all kinds of economic issues. So Putin has a reason to want to settle. The question is where do they go from there? And I think, as Zelensky points out, you can't trust Putin.
Did you see the Draghi essay this weekend off his Chatham House effort?
Yeah, you mean to start eliminating barriers.
What did you think about it? I mean, what does Lagarde think about that? She's having a fancy cup of French coffee at the place outside Paris. How does she perceive what Draghi said?
Well, just reading kind of between the lines, I think basically what he's saying is that European countries have a different attitude towards government regulation and consumer safety than the U.S. does, and that's okay. But there are a lot of bureaucratic obstacles in the way of getting things done. And that's one of the big issues here. One of the questions that comes out of the whole Doge thing is, are they really going to save money or make things work better by just firing people? Or is it just the systems that need to change? I don't mean the computer systems. I mean the number of people who have to sign off on something and the various layers of bureaucracy. And if Europe could follow Draghi's advice, then it might make it a better place to invest.
There's a window into the incredible asset Michael McKee is for Bloomberg LP. I mean, with his experience. How you were like 50? Could you drink at Reykjavik when they passed around the bottle of vodka? Could you drink?
Unfortunately, Tom, I could. I was not 15, which means that today I'm a lot older than.
Okay, Michael McKee, thank you for that perspective. Greatly appreciated. Right to it with Futures Up 23, our news. In New York City, John Tucker.
And a round of talks have concluded, a round of talks to end the war in Ukraine and Saudi Arabia. No word so far on the outcome. Secretary of State Marco Rubio and the Russian Foreign Minister Sergei Lavrov led the talks. They did not include Ukraine or the Europeans. Let's get more from Bloomberg senior reporter Kevin Whitelaw.
We don't know a lot, and I think that's part of what's unnerving many in Europe right now is that this is moving much faster than anyone had really anticipated. These direct kinds of talks are ones that have been the U.S. had avoided under Biden. And so even though the U.S. has suggested that these are just preliminary talks, the speed of them has everyone nervous about whether this actually could end up moving further. I think the real question that Europe has going into it is they just don't really understand what the U.S. bottom line is, how much they're willing to concede or give to Russia. And at the same time, we still don't really know how serious Russia is about any kind of negotiation that really provides any kind of actual future for Ukraine.
That's Bloomberg senior reporter Kevin Whitelaw. In Washington, President Trump's government efficiency push is drawing more high-profile resignations. The acting Social Security Commissioner, Michelle King, resigned over the weekend after protesting the Doge team's attempts to access sensitive systems. President Trump is replacing King with Leland Dudek, an anti-fraud manager who's passing over dozens of higher-ranking officials. Well, separately, the head of the Food and Drug Administration's Food Division, Jim Jones, resigned yesterday, citing widespread job cuts across the agency. And nearly 24 U.S. attorneys were fired last week, but they didn't find out officially until last night. That's because of an email mistake. Bloomberg Laws learned 22 top prosecutors from across the nation had termination notices sent to their internal government email accounts rather than their personal emails. The prosecutors suspected their jobs were on the line after they lost access to government devices last Friday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom, Paul, Lisa.
John, thanks so much. We've had so little time to deal with this. SNL 50th anniversary, it sort of caught up on me.
Yeah, it did. It was a huge event. Yeah,
a success, right?
Yeah, unbelievable.
15
Lorne
million
Michaels,
people.
I mean, yeah. And it's just amazing what Lorne Michaels has done there for 50 years. And one person really, one could argue, is responsible for that.
And what's amazing is out on YouTube, 6 hours later, they got all the vignettes.
Yep, all out there.
That's the future of YouTube. They're going to have Lisa's newspapers out there soon. This is Bloomberg's Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the average U.S. temperature in February 2025 exceed 36 degrees Fahrenheit? At IBKR forecast trader, the yes, recently at 44%. What's your take? Trade your prediction at ibkr.com/forecast. Right, we've got trading picking back up after the holiday. Right now, futures on the rise. We have NASDAQ futures up about 0.5%, S&P futures up 0.3%. Dow futures right now, they are little changed. The 2-year yield, 4.28%, up 1 basis point. The yield on the 10-year, 4.52%, and that's up 4 basis points. More economic data this morning. The New York Fed Empire Index, it rose to 5.7. That was above estimates. But this week, we also have housing starts, building permits, initial jobless claims, existing home sales, and also a read on sentiment. So a little bit of a break from last week's data overload. Companies making news. China's state weather agency is actually considering using DeepSeek to power its forecasts. It's part of the government's hopes to be a, quote, weather superpower that will rival NOAA. And then in other news, we have starting today some FTX customers, well, they're set to get their money back. It came more than 2 years after Sam Bankman-Fried's cryptocurrency exchange filed for bankruptcy. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. I'll go back to Lisa Mateo here to get the market open here in 4 minutes. A little bit of weakness to the tape into the market opening. We were up 24. Futures now up 20 as well. We have like you have to have Republicans and Democrats on and all that. Of course, if we talk Duke, we have to talk Chapel Hill.
That's right.
Only reason Callie Cox was booked.
Exactly.
I mean, no other reason at all. Joining us now with the best newsletter note in the street is Callie Cox. She has a privilege of working at Ritholtz Wealth Management and surviving their senior management. Callie joins us right now. And the note is Optimist Callie. Let's start there. Callie Cox, how do you avoid the pessimism that forces people into safety when they've got actuarial assumptions that say they need growth?
About the note's name, Tom, I have to give a shout out to senior management because that was Josh Brown's idea. But I think it's a good reflection of how we at Ritholtz and personally how I view, markets and the economy. And I think you have to do that based on the burden of proof, right? Evidence throughout history that U.S. stocks and, the stock market has been the only game in town to build wealth and beat inflation. So my newsletter is all about processing the headlines that we see day after day in the context of that super important context.
Do the layoffs that you feature today, great charts, by the way, see that at Ritholtz Wealth Management. Callie Cox, do the layoffs, the trauma of inside the Beltway, Washington, does that lead to diminished consumption, which finally slows the stock market?
I think we have to take a few steps back here. And I have been on the record for years saying that the job market is the engine of the economy. So when you see one of the biggest job cuts or mass layoffs in history, you have to talk about it no matter where you are in the political spectrum. These layoffs, and we're also getting a sense of how big they are. But the reports right now are that most, if not all, of probationary workers in the federal government could have been affected. That's 200,000 people. If that's true, plus the buyouts we've seen, plus the hiring freezes we've seen in the federal government, that could have a huge impact on the job market in DC and consequentially on the job market in America. And yeah, if you think about Americans, when we make money, we spend money. Consumer spending is 70% of the economy. You should be worried about this.
And Tom, on that issue, Torsten Slok, our friend at Apollo, is out with a note tracking the employment rate in the greater DC area, and we're starting to see it tick up a little bit. So he's going to, and it comes out every Thursday morning for the district and northern parts of Virginia and southern Maryland. So we'll keep an eye on that. Callie, so you talked about kind of the equity markets being the real driver of wealth creation historically, and actually within the equity markets, it's been the tech names that have been really the sources of our performance here. Can that still be the case going forward, whether it's Mag 7 or some broader definition of tech? Is that still going to be a leader?
Well, another concept we like talking about at Ritholtz a lot, and we serve long-term clients, right? We're not making trades for a month or even a quarter or a year ahead. We're thinking 5 to 10 years down the road. But something that we preach at Ritholtz and that I personally believe in is portfolio balance. And I think portfolio balance is going to be the phrase of the year heading into 2025. And we're already seeing it, right? Tech is lagging the S&P 500. The Magnificent Seven hasn't been so magnificent. And it hasn't necessarily been because of fundamental developments. Profits are still growing at a strong pace among big tech companies and the tech sector in general. But expectations are really high for tech companies right now, and it's becoming clear that they're not the obvious winners of this AI story that's propelled them for so long.
Callie Cox with us with Ritholtz Wealth Management. We will continue here. First, though, we need to get the market open. We do that with a VIX at 15.59. I'm going to call it, ready? Somnolent.
Oh,
it's like quiescent, but it's quiescent and somnolent.
Dictionary
little green on the screen here right now. We're up 24 into the market open. We're up 12, so give him back a little bit. Lisa Mateo.
You got it, and we'll start with the S&P 500 up about 0.1%, 10 points at 6,125. We move over the Dow. Right now, little change, down about 20 points, 44,519. And finally kicking in with the NASDAQ, up about 0.3%, 65 points at 20,091. We have the 2-year yield at 4.28%, up 2 basis points. The yield on the 10-year, 4.52%, and that's up 4 basis points. The Bloomberg Dollar Spot Index up about 0.1%. And right now we have Bitcoin up about 0.1%, just over 96,000. Finally, at the open, leading the Mag 7, we have in the lead NVIDIA up about 2%. That is your Bloomberg Opening Bell report. Paul and Tom.
Lisa, thank you so much. We continue with Callie Cox of Ritholtz Wealth Management. What's the Cox exuberant meter look like, Callie? It's been our theme this morning. Huge divergence among strategists. But is there a retail exuberance out there? Ritholtz is very good at that, aren't you?
Yeah, so we look at a few different gauges here. The one that's my favorite gauge is the AAII gauge of sentiment, which was looking a little euphoric toward the end of last year, but there's actually been a big swing from euphoria to some of the biggest pessimism we've seen in a year and a half, which I think speaks to the policy uncertainty that we're under right now. The sell-off or the relative weakness we've seen in tech. I think it's one of the most interesting stories on the market right now because these past few years have been propelled by fear and pessimism, and now it's coming back.
Callie, we're almost 80% the way through the earnings season this season. Is there enough earnings growth out there to support this market based upon what you've seen and maybe some of the guidance we've heard?
I think so. And you have to keep this in mind when you're talking about how the market is overvalued. Yes, valuations are quite high, especially in tech, especially in these more growthy names, but we are seeing strong profit growth, and I'd say the strongest profit growth in growth names right now. That may not continue. You know, if you look at Wall Street analyst estimates, there are expectations that this earnings growth will broaden out to other sectors. In fact, as soon as this quarter and the next earnings season. So if that's the case, then I would expect other sectors to play catch up in markets. And that's one of the reasons why we're preaching portfolio balance.
But it's not broadened out. What it's really about is a huge body of people that aren't in the market. What do you advise to the cash crowd?
You're right, Tom. You know, there's a lot of cash on the sidelines right now, and an unusual amount considering how well the stock market has done over the past 2 years. I get it. You know, if you're getting 4% on your savings account right now and the world feels uncertain, then yeah, you probably like the comfort of cash right now. But I think you have to be very intentional with your cash balances at the moment. I think cash looks like more of an attractive hedge than it did possibly a year ago because it looks like rates will stay relatively sturdy. But again, stocks are your path to building wealth and beating inflation. You can't forget that.
Optimist Callie, thank you so much. Callie Cox with Ritholtz Wealth Management.
Yep.
I think their minimum investment's, what, $100 million?
I don't know. I'll have to check with Barry on that. Maybe we can
Good
get a
morning,
discount.
Josh and Barry, and just thrilled to have Callie on. I love that. Optimist Callie.
I know.
Brilliant.
That's
just
kind of our newsletter. Yeah, it's very cool.
There's Pessimist Tom. My newsletter's coming out. Callie Cox.
World's coming to an end.
It's just we're all going to die. What do we got here? Red and green on the screen. It's a churning market, and it's very different than the oomph we saw in futures an hour or 2-3 hours ago. What do you think, Paul? Like the Lavrov statement out of our Budapest office? I don't think so.
No, I don't think so. I bet there's a lot of
Terrorists? I
geopolitical
don't think so.
uncertainty out there. And again, there's a lot of reporting to say how fluid the situation is.
I get it. The third base decision for the Boston Red Sox. That could be it.
That could be it.
I mean, I am seeing red on the screen.
Yep. And the Dow.
They're paying some guy a lot of money. And they go, hey, how about that DH? And he said, hey, how about not?
Exactly.
Mr. Devers, I should say.
Well, it's good enough for the Red Sox. But it is.
Drama.
They're reporting. Everybody's back in Florida and down out in the desert. So
Orioles say they'll spend whatever it takes.
Sure. We know some people there.
You know, it's okay. How about the Yankees?
They're in good shape, I think.
You think they're
very
in good shape?
Yep.
We turned to our control room. Are the Yankees in good shape?
Good
shape. You think so, Eric? Size on with Stanton saying, can you do it again this year? Please. Stay with us. Red and green on the screen. The VIX 15.82. From New York City on YouTube, subscribe to Bloomberg Podcast, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Looks like a rally in chip makers driving stocks toward all-time highs. Right now we have shares of Intel up more than 8%. We have NVIDIA up 2%. Of the 11 major industry groups, semiconductor materials leading the charge. We have applied materials at the top. They're up more than 2%. We are on records watch, so let's get right to it. The S&P 500 up 0.1%, 6 points, 6,121. We get to the Dow down about 0.1% or 50 points, and the NASDAQ up 0.2%, 47 7 points at 20,078. We have the 2-year yield, 4.28%, up 1 basis point. The yield on the 10-year, 4.52%, and that's up 3 basis points. Shares of Conagra Brands, well, they're down about 7%. The company cut its fiscal 2025 guidance, pointed to supply constraints. That's the reason for that. And then you have H&E Equipment Services. They're jumping about 12%. This is after announcing that the company received a better offer from Herc Holdings. Shares of Herc, they're down about 16%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Market's indicating not the strength we saw 2-3 hours ago with futures. I don't know what to time it to. There was a Lavrov summary of Russia out of Budapest. Maybe. I just don't know what to put it to. Maybe some economic data. Here, Japan actually pretty buoyant 12 hours ago, but red and green on the screen right now. S&P up fractionally is how I'd put it. Our next guest is a 4-hour it's a 2-hour conversation, but with the news flow, it's a 4-hour conversation, and we don't have time for that. Anton Posner joins us now, Chief Executive Officer at Mercury Resources. He was spellbinding the last time I talked to him about Panama, and actually to get the boat from point A to point B. What do you do in the canal? Anton, with all of your work, what I notice is a new America isolationism. If I've got someone like Ian Bremmer saying, here's South America, here's what we used to do, here's what China's doing, or this the South China Sea, whatever. How does Anton Posner identify and define this new American isolationism?
Good morning, guys. Great to be on again, and I'm really would love for you to show any thin pictures of me going through the Panama Canal like you did last time. So anytime you want to show that, that's always great. As you said, Tom, right, we're seeing a new era of isolationism here. America is safer when we have eyes and ears around the world telling us what's going on, right? Let's take a look. You mentioned Ian Bremmer, of course, who's been very vocal about this. Also, I would like to mention Admiral Jim Stavridis' piece in Bloomberg, I think it was yesterday or the day before, about what's happening at USAID.
Did you see over the weekend the guy that put out the chart of the Louisiana and Florida and the Gulf of Stavridis?
I think I might have caught wind about that potentially.
Continue.
So, yeah, it's great. I think this is core issue, right? Let's listen to our war fighters, Admiral Stavridis, right? In the piece that he wrote in Bloomberg, the 3 Ds: defense, diplomacy, development. Listen to our war fighters. What AID was doing was not charity, not perfect. Reform, yes. Dismantle, no. Right.
So USAID, I mean, tell our listeners and our viewers kind of what really is the theory behind USAID and what's happening now?
Yeah. Well, I think two-pronged, right? And I'll tell you, Paul, this is my opinion here, right? I'm certainly not ever worked at USAID, so take it as my opinion here, right? But it was developed under the premise of fairly self-serving for the United States, right? Being able to deploy aid workers in regions of the world that are critical as the early warning system for America, right? Not only in terms of uprisings, terrorism, instability in areas that are going to affect American lives, but also the flip side is the charity part, right? The element of being able to do good.
Anton, we've got a headline coming out, which certainly you can address, and we're thrilled that you're with us. Anton Posner with us with Mercury Resources. Moments ago, Mr. Zelensky of Ukraine, quote, cancels plans to visit Saudi Arabia on Wednesday. He, quote, plans to visit Saudi Arabia in March. This is he's speaking in Ankara with Mr. Erdogan. He says he will not go to Saudi Arabia. So that shows you got to believe that may be why we saw futures give way.
Right.
Somebody was, getting that out in Turkey there, but there's the official headline. Anton, it's really an upset between the bilateral discussions of the administration and I guess Mr. Putin and Mr. Lavrov and the stability for markets, isn't it?
Mm-hmm. Right. Yeah. The bilateral discussions, I think no one's surprised that was the direction, the initial direction that the United States government was going to take on this. We saw the same situation play out in the negotiations with the Taliban prior to the agreement that President Trump put in place to withdraw troops from Afghanistan during the last administration. It did not necessarily work out well in the end of the day.
So, Anton, switching gears to tariffs, trade war, kind of where are we here on these discussions? Because the administration came in, both barrels blazing here as it relates to tariffs. Where are we in terms of implementation?
Yeah, we're up in the air. Well, it's the best way to describe it, right? Trying to pinpoint specifics at this point is trying to nail Jell-O to a wall right now. We know that there's going to be adjustments. There's posturing, there's announcements, there's some specifics that come out on some certain items because of the at Mercury Resources, because of the myriad of commodity sectors that we service, trying to keep track of what's going to be hit, what's not going to be hit, what the exceptions are, is exactly what I said right about the Jell-O on the wall. So we're in a wait and see situation at this point. I'll give you some examples. Over the past week, because of the potential tariffs on import aluminum, we saw trading companies rushing to try to move positions of physical aluminum into the U.S. to potentially beat out March 12th deadline on that, right? But the question is, which countries are going to be excluded at any particular time, and what is the criteria for being excluded and for getting trade preferences, right? Is it potentially, right? Who knows exactly? So, yeah, seeing a lot of movement.
Thank you for the brief. Anton Posner, greatly appreciate it. It's just a jumble of foreign news. You see it on the screen here. There's a real activity here as people sort of, what would you say, Paul, bounce off the headlines?
Yeah, exactly. And we've been here before, but there's some high stakes here geopolitically.
The VIX not out to 16. We've gone from 1550 out to 1592. Quickly, the news in New York City. John Tucker.
And the talks have concluded in Saudi Arabia between the U.S. and Russia to end the war in Ukraine. Ukraine not represented at that meeting, headed by Secretary of State Marco Rubio and the Russian foreign minister. Yesterday, Ukraine's President Volodymyr Zelensky reiterated that he won't recognize any agreement reached without his country.
Ukraine is not participating. Ukraine knew nothing about it. Ukraine regards any negotiations on Ukraine without Ukraine as negotiations with no result. And we cannot acknowledge any arrangements about us that were made without us.
And as we heard just a few minutes ago, Zelensky has canceled plans to visit Saudi Arabia on Wednesday. President Trump's push to rein in the federal government is leading to more high-profile clashes. According to the Washington Post, the acting head of the Social Security Administration resigned over the weekend. This after a dispute with Elon Musk's government efficiency team over its attempts to access sensitive government records. Another plane crash. A Delta Airlines plane flipped upside down upon landing in windy and freezing conditions in Toronto yesterday. All 80 people on board did survive. 15 were injured. Bruce Landsberg is a former vice chair of the National Transportation Safety Board.
We will have a team going up there. The GO team is just in the process of getting organized now, and they'll go up there and they will participate with TSB in going through the wreckage and gathering information, and then we'll provide our expertise and we'll share knowledge.
In the meantime, the Trump administration has begun firing several hundred Federal Aviation Administration employees. Probationary workers were targeted. Global news, 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom and Paul.
John Tucker, thanks so much. Appreciate that this morning. Looking at the dollars, the global litmus paper, DXY, at 107, a little bit of fragility, but nevertheless a bid to the dollar this morning. Euro flat, euro decidedly not weaker, which, I think is part of this news flow. 104.49. We need to say thank you particularly to our Budapest News Bureau for driving forward our coverage of these bilateral discussions between the United States and Russia. Good morning.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Oh, with the news flow, folks, this is way too short a visit. I got 8 ways to go here. I could do an audible and talk about the first time Matt Winkler was in Budapest setting up our news bureau there. I could talk about, well, his recent essay here on inflation and the what-ifs of a 5% 10-year. Or I could talk about Michael McDonough's Bacon, Egg, and Cheese Index. I go in, Matt Winkler, you and Tom Secunde have on the Bloomberg terminal the BLS Bacon and Cheese Index, which is a moonshot. Are we going to a 5% 10-year?
Tom, it's always great to be with you. Thank you for that introduction. Truth be told, my colleague and yours, Shin Pei, who does all the numbers crunching for us, really did some serious Bloomberg terminal investigation here. And what it does show, in fact, is that for the first time, actually since President Trump and Melania disclosed that they had COVID-19 back in October 2020, that the bond market is signaling higher inflation 2 years out.
A lot of people agree with that, and you've got a brilliant part. I know you didn't do it. It's all Shin Pei. It's the University of Michigan index. Would you say, with all your Fed work, that this is an unanchored inflation rate?
It sure looks that way. Now, that's understandable, given what we've just witnessed in the past 25 days. I mean, it's been nothing but chaos, and I don't need to tell you, the Treasury market certainly prefers something more orderly and certain than what we've been witnessing. The world's been turned upside down in the past 25 days, not to mention the U.S. government.
So, I mean, a lot of folks, when they think about some of the economic policy from the second Trump administration, whether it be tariffs or whether it be change in immigration laws, cite the potential for inflation to come from those actions in and of themselves. Is that what the market's kind of showing you?
Well, it's there. Let's put it this way. It's there. And the uncertainty, the chaos is there. And that's not going to go away. And that's part of, if you like, the Trump modus operandi. It's one word, chaos, and it just continues. And so you can expect the Treasury market, particularly at this moment, to be filled with all kinds of doubts about what comes next.
Well, one person's chaos is another person's animal spirits, economic deregulation, pro-business policies. A lot of people are feeling very positive about that side of the equation.
Yeah, look, and one of our columnists, Claudia Sahm, who you're all too familiar with, had a recent piece, I think, on Substack, in which she said if you just look at the data, even the January data, which is historically noisy, the inflation outlook isn't bad. It's actually pretty good. But that excludes everything else that's going on in the world, which you guys have been reporting on this morning.
In Atlanta radio, I got 1 minute. I'm not sure Bloomberg News moved the market today, but Andrei Lemchenko out of our Budapest News Bureau summarized Lavrov in this bilateral discussion. What was it like as editor-in-chief opening Eastern Europe news bureaus 35 years ago?
Well, to borrow, if you like, the mantra of my successor and your boss, John Micklethwaite, it was the most exciting time, I think, to be alive as a journalist, because we were chronicling capitalism. And Bloomberg was the chronicle of capitalism in its infancy. And that's what we were doing in Budapest, because the Cold War, as it were, ended. And suddenly all these places that had been dynamos, economic dynamos in the 19th century were flickering to life with the West. And that was a wonderful opportunity for us.
Congratulations to our Budapest news bureau today with all that we're doing over there in Eastern Europe, out of London, and particularly managed out of Dubai with what we've seen in Russia over the last number of years. Matthew Winkler is editor-in-chief emeritus, Bloomberg News, with an important piece out on inflation and what many of your concerns are, which is a higher yield. It is, as I used to say to Matt, a holiday lengthened work week. We will try to get to Wednesday. The kinks to get us out. Good morning, everyone.